Good afternoon, dear members. We at Trichur branch of SIRC of ICA jointly with Kozhikode and Palakkad branches of SIRC of ICA are extremely honored to host a series of VCMs on standards of auditing. Today, being the inaugural day of the 3-day series, we have a plethora of dignitaries on screen. Today, we have our chief guest of the event, Central Council member CA MP Vijay Kumar. We have today's speaker, the very dynamic and our own ex-officio member and past SIRC chairman, CA JOMON George. Along with them, we have our own chairman of Trichur branch, CA Audit KK, CA Vinoj Menon, the chairman of Palakkad branch, and CA Arun Subramaniam, chairman of Kozhikode branch. Now, before moving on to the welcome address, we have the motto song being played on the screen.
Yaesha supteshu jagrati Yaesha supteshu jagrati Kamam 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 Pursho nirvimanaha Tadeva shukram Tada Brahma Tadevamritamucchate Tasmin lokaha Shataha Sarve tadunatyati kaschan Etadvaita
Over to the chairman of Trichur branch, CA Arun KK, for the welcome speech.
Thanks, Vice Chairman, CA Ajit Kemal. Our respected Central Council member, CA Vijay Kumar MP, our ex-officio member, past SIRC chairman and speaker of the day, CA JOMON George, organizers of this webinar, chairman of Kozhikode and Palakkad, vice chairman, CA Ajit Kemal, committee members of Trichur, Kozhikode, Palakkad, senior members and fellow members and friends of Trichur, Kozhikode and Palakkad, a warm good afternoon to all. Outset, let me thank Kozhikode and Palakkad branch in organizing this webinar. This is a joint webinar allowing Trichur branch to host it. It is a honor to Trichur branch, what our vice chairman has mentioned. Thanks to Vijay Kumar sir accepting our invitation for inaugurating this 3-day joint webinar. Thanks to JOMON sir for accepting our request and arranging the faculties and the topics to be included in this joint webinar. Regarding this joint webinar, first day we have 5 essays, which is going to be taken by JOMON sir. And second day we have, and the third day we have 4 essays. Second day we have Bhavani Balasubramaniam madam, and third day we have CA Aniket Talati, Central Council member. Today, our first day, JOMON sir is covering essay 220, essay 500, essay 500,
yeah.
essay 570.
I didn't get that. Could you try again?
Sorry, it's sort of.
I think if we can unmute everyone other than Aryan for the time being.
No, sir,
we can do it as.
No, sir, it come from my Mac. It automatically picked up. Sorry, essay 500.
Okay, fine. No
experts of the subjects are waiting to deliver the speech, not taking much time, as the members are waiting to hear from the chief guest and the speaker. On behalf of the management committees of Trichur, Palakkad, and all members attending the webinar, let me welcome CA Vijay Kumar MP, Central Council member, to inaugurate this joint webinar. CA JOMON George to speak on the topic standards of auditing. CA Arun Subramaniam, chairman of Kozhikode branch. CA Vinoj Menon, chairman of Palakkad branch, committee members of all the 3 branches. I also welcome all the members to this session. Thanks. Now I am requesting the Vice Chairman, C. Ajit Kaimal, to introduce the chief guest. Over to you, Vice Chairman.
You have to unmute.
Sir, you
Ajit.
have to unmute.
Sorry. Thank you, Chairman Aryan, for the privilege. Good afternoon, dear members, once again. Now, our chief guest is a chartered accountant, cost accountant, and company secretary. He joined SIFI in 2007 as CFO and also serves as director on the boards of XBRL India Limited, SIFI Singapore PT Limited, Cella India Software Services, and Tejo Engineering Limited. He is a member of the IFRS Advisory Council and SME Implementation Group, and he also serves as a council member of Institute of Chartered Accountants of India since 2016. His leadership roles include heading the Accounting Standards Board, the Digital Accounting and Assurance Board, and Valuations Standards Board as chairman, Financial Review Reporting Board, and Committee on Accounting Standards for local bodies as vice chairman. His industry associations have seen him being part of the CFO Forum, the National Committee on Financial Reporting and Accounting Standards Board of the Confederation of Indian Industry, NASCOM, etc. National and international awards have come his way, among them being recognized as among the 100 most influential CFOs in India by CIMA, making the roll of honor of the top 100 CFOs in India, and very recently the National Award for Contribution to Financial Accounting by Capital Foundation Society. He also dons other hats as a speaker on the professional circuit in India and the Middle East and Southeast Asia on IFRS, accounting standards, audit, corporate laws, and capital market. And as an author of over 10 popular titles on accounting, accounting standards, audit standards, company law that are in continuous reprints. His early professional engagements include being a partner at chartered accountants firm Yognath and Ram LLP. Prior to them, he headed the investment banking portfolio in addition to being a company secretary of Sundaram Finance Services, Chennai, the investment banking arm of Sundaram Finance Limited. Now, we all know him as a teacher for over 20 years on accounting, financial reporting, and corporate law. With these words, let me introduce the chief guest of today's program, CA Vijay Kumar MP. Sir.
Thanks, Ajit, for that introduction. It was a detailed one. Thanks a lot. Greetings to all. Trust all of you are safe and your near and dear ones in good health. My sincere thanks to the managing committee of the 3 branches, Thrissur, Kozhikode, and Palakkad, for the invite. And sincere thanks to JOMON, Aniket, and Bhavani Madam, all 3 of whom are hands-on subject matter experts in audit, who have been so kind enough to give their time and address as part of this 3-day series. Let me use this opportunity of keynote address to share my thoughts on the run-up to the audit in 2030s. And thereafter, I'd just like to sensitize on some important aspects of audit in the context of the pandemic. Let me add a caveat that all the views I share are my personal views as a professional who has been in practice, industry, and now in a regulatory body. And none of these views should be seen as views of the institute or any of the committees of the institute. I'll speak on 7 trends which I see are discernible in the run-up to 2030s, and those in the attest function, and I'm sure almost all of you here are in the attest function, will have to see how to stay afloat. Trend 1, the rise of automation. Ever since the Industrial Revolution kicked off more than 175 years ago, the human fascination for technology has multiplied. Companies have automated a lot of their manufacturing and service processes. Over the years, these have affected the staid-old professions of accounting and audit as well. From 13 columnar sheets, I still recall my article ship days, 12 months and a total 13 columnar sheets, to AI-driven data analysis pack. We have come a long distance. Let us not associate technology only with large public listed companies. In fact, my experience, it is the smaller entities that are more nimble. MSMEs, which are characterized by a high degree of centralization in decision making and deficiency in internal controls, to embrace technology as they all step into the growth highway. Auditors too must keep pace with time and embrace new audit technologies. Since these tools and audit laboratories can be expensive, small and medium firms will use cloud-based tools on pay-per-use model. At the Institute, there are some initiatives in this direction to make available some tools at a cost-effective basis. Intelligent process automation, popularly abbreviated as IPA, is the next upgrade from RPA, robotic process automation, which has come to stay as an advanced data extraction tool with its inbuilt artificial intelligence module helping in decision making. Such changes compel us to evaluate our competency levels. Are we as auditors prepared to do it in the areas we specialize in? Audit, accounting, consulting, tax, and compliance. The Institute has stepped in to help in this direction. We have in the last year released version 2.0 of Digital Competency Maturity Model for Professional Accounting Firms, which helps accounting firms make these self-assessments. DCMM provides implementation guidance on how far one should move ahead. However, being competent and mature enough to handle digitalization is just the start. There's a long way to travel on the road to execution. The winners will emerge from those who assess themselves, make the necessary shift, and go the full distance on technology. Trend 2, we will have to define audit quality. And I'd like you to follow this pretty carefully. Judging audit quality is both subjective and challenging. It is beyond compliance to standards and processes, adherence to legislation, and zero defects. Today, we are unable to define quality. We go back to an oft-quoted statement on photography. I don't know what's good quality photography, but I know it when I see one. Similar is the stand we have to take on what constitutes audit quality. This stand must stand. In the next 2 years, we must have a generally accepted definition of audit quality. Yesterday, at the Institute, we have issued a framework for audit quality maturity model. And sometime soon, we will also be issuing what we call as audit quality indicators. Audit quality maturity model, the exposure draft has been given. I would request all of you to apply it in your firm, identify areas for improvement in the model, and give us your views so that 1st July when we launch it, it will be a much better product than what it is at the exposure draft stage. And this audit quality maturity model is basically for giving us a sense of the audit quality practices within the firm. But more important is the next one, which is audit quality indicators. Audit quality indicators are the agreed matrices of audit quality between the auditor and auditee at the commencement of audit, which is reviewed during the audit and after the audit. So audit quality indicators is a fairly evolving topic world over, and some of the audit firms have already started these as voluntary best practices in engaging with their audit clientele. Aside from auditors, the clients too must take cognizance of these developments. If that happens, it will add cheer to the auditor's efforts and minimize the audit expectation gap. Thankfully, audit reporting has slowly moved from template-based reporting to a more entity-specific reporting. Contrast this with the audit of 90s and 2000s. My personal view, the last 10 years audit is extremely exciting, largely because of two standards. And I'm a huge fan of these two standards, SA 706 and SA 701. These two are such a huge empowerment on the auditor, where auditor gets the opportunity of emphasizing on some matters which are already part of financial statements and bringing to attention certain other matters to the user of an audit report. And SA 701 is one class ahead. While it is mandatory for listed companies, the unlisted private limited companies can also, the auditors can use it for them also. It is mandatory for listed companies, but I would encourage every auditor to use it even for private, limited and unlisted entities as well. SA 701 requires the auditor to communicate based on the work he has done, the 2, 3, 4 areas which he believes are the important areas of audit when he has done the audit, why he believes they are important, what procedures he has performed, and how he convinced himself in forming that opinion. So with these two standards, the audit report for a client A and client B will not be the same. It will not be a template. Each one will be unique and client specific. Even for a client, between years, the items would change and it would make the audit a more useful report. These have helped the improve the quality of audit and importantly, enhance the relevance of audit opinions to users. I strongly appeal to all of you and particularly to younger members. I'm taking that liberty. Do not see audit report as a template or a checkbox to be reported. The audit opinion should be of use to the user. And if that use is lost, the whole purpose of audit itself will get defeated. And audit opinions will be useful only when they are communicating. And when it is communicating, it has to be complete and truthful. CARO 2020, which is exhaustive and looks onerous, is also a step towards reducing the expectation gap. And this CARO 2020, mind you, is a shrunk version after lots of deliberations. And if the quality of financial reporting and audit is not improving, this CARO will only become much longer. And do not be surprised if you see a long form audit report come, even for companies as well. It is in our hands to ensure audit quality and give confidence to all the stakeholders. It is crucial to define the expectation gap, which is a very nice jargon everybody talks about, and I am no exception, and identify the reasons for it. Expectation gap is the difference in perception between what the public think auditors are doing and what the public wants auditors to do. This gap hasn't narrowed with time, and there are three reasons for it. First is the knowledge gap. What auditors do is different from what public thinks they are doing, and this is the knowledge gap. In fact, the public, many of them think that when we are doing audit, it's as good as forensic, but it is not what we do. Professional bodies like us communicate with audit firms by making available updated information on changes in regulation and the need for change. Audit firms, in turn, interact with clients and sound them out on those changes. But somewhere down the line, the message the public receives is feeble and not forceful, because of which there is a perceived absence of a wider reaching platforms. Second is performance gap. What auditors are supposed to do differs from what they actually do, and this is known as performance gap, and some also call it as the delivery gap. Let us underscore one aspect. ICAI, as the standard setter, has been continuously responsive by updating standards on accounting audit ethics and by providing implementation guidance. The action on lax and inefficient auditors is not as fast as some wish it to be, and so the public perception is one of laxity. Third, evolution gap. What the public wants auditors to do and what the auditors are supposed to do is called evolution gap. Society is unmindful of what the auditors are supposed to do. True, regulatory changes are taking place at a breakneck pace. New legislations, new standards, revision in existing ones have been coming in at rapid pace. The last 7-8 years, Companies Act, RERA, GST, Ind AS, and host of them, the auditors are not lagging in compliance with amended laws. That's my experience, and I firmly mention this. They are not lagging. Despite that, the public expects audits to evolve in a way as to prevent the failure of the audited client. We in the profession must look at this expectation gap and narrow it down. The winners will emerge from those who can bridge the performance gap fully and the other two gaps as much as they can. Trend 3, separate grammar for a separate class of companies. Standards are the grammar of both accounting and auditing. There will be a different set of financial reporting guidelines for less complex entities. I'm sure all of you are aware, for non-company entities, ICA has issued an announcement on 30th of March 2021 in terms of relaxing the number of standards which are applicable for micro entities. The auditing standards now apply to all audits, irrespective of their nature, size, and structure. Whether it is for a company like IBM, which operates in 100 countries, has 5 lakh employees and turnover of a few billion, or a company which is a Palakkad-based company with a turnover of 5 crores. Both of them today have exactly the same audit standards. This practice is leading to auditors to focus on compliance and not on judgment. In the years ahead, we will most likely have a different pack of standards for auditing for less complex entities. Such a package would make documentation and risk assessment disclosures easy. Judgment will be back in auditing. I have word of caution, particularly for the younger members. Audits, while checklists are important, checklists can never replace judgment. Judgment comes out of deep understanding of the client, the client's business, and the client's control environment, and out of experience. Judgment can never be replaced by checklists. Checklists can help better quality judgments. To that extent, checklists are important, but please do not treat checklists as doing audit. There is a judgment to be formed, and that judgment is key in auditing. Limited internal controls and management override characterize several MSME audits. These are demanding situations that affect efficient audit performance. Worse still, these situations come with low remuneration. If an auditor assumes that the examination of an MSME client carries a lower engagement risk compared to that of a larger entity, my experience, the auditor is mistaken. MSMEs most often scale at a higher growth rate and do not have robust internal control systems and other governance oversights to manage the pace of growth. It is nobody's case that work should be done only to the extent of fees received. But if truth is to be told within this limited audience, that's an overriding reality in at least some. We will see audit firms agree upon and insist on minimum fee commensurate with the nature and size of the engagement. Winning firms will be the ones who realize the engagement risk in every engagement, small, medium, or large, and who either cover it or seek to a price for it. Trend 4. Fraud detection is auditor's obligation. Like trend 2, I seek your attention on this trend 4. Fraud detection is auditor's obligation. Fraud will be the biggest challenge in the future. An auditor of financial statements has a fraud detection responsibility, especially if it leads to a material misstatements in financial statements. SA 240, I don't know whether it's covered today, tomorrow, day after, lays the primary responsibility for preventing fraud at the feet of the management. So primary responsibility for fraud prevention is with the management. But as an auditor, we are responsible for providing reasonable assurance. The truth is that there are several limitations in audit, and even if audit is planned properly, some material misstatements may remain undetected, and SA 240 recognizes this. If we want to be in a test function, we must learn to live with this reality. Look at the challenges. The Companies Act 2013 requires auditor to report fraud to the central government, but does not require auditor to carry out an investigation. A reading of audit standards and Companies Act throws a couple of aspects. First, an audit engagement requires auditor to express a true and fair view on financial statements, but such a commitment does not envisage that all frauds would be detected. Second, a fraud not being exposed does not mean that the auditor has not carried out his engagement correctly. When no fraud is reported or comes to light, we don't compliment the auditor for a job well done. But at the faintest hint of a scandal, I repeat, faintest hint of a scandal, the stakeholders descend on the auditor with a barrage of questions, and we in the audit profession must never lose sight of this reality. I have a small request to all who are listening now. Whenever there is an issue coming up, let's say PNB or whatever, I would suggest that members within our fraternity, without getting to understand the whole of it, we should not come to prejudgment on the failures of audit. I have seen many cases of failures. They are failures largely because of business model, management, governance procedures, and or some accounting mischief. And these are not something where auditor could have easily detected. I am not for a moment defending the auditors, but at least as professionals who understand audit, it's very important that we do not come to a conclusion before a complete inquiry is done. While auditing, an auditor maintains the mindset that fraud is always possible. When the auditor is a fraud examiner, he begins his or her assignment with the belief that someone is committing fraud and affirms that belief unless the evidence shows no signs of fraudulent activity. Whereas in a regular audit, we must be alert towards the perpetrators and the impact on the defrauded organizations. The best practices could be implementing audit procedures that would throw up red flags or warning signals, recognizing that submission of financial results is merely the end result of an audit process that runs throughout 1 year, during which the integrity of audit should be unquestionable. No member of audit firm, and I reiterate, no member of audit team can entertain the view that detecting fraud is not an auditor's job. I'm highlighting this because I do come across certain audit teams where they start off the audit job thinking that detecting is not my job at all, and there's a sense of complacency. If this is the case, then compliance with audit standards on fraud detection may become a rote exercise. Being alert to factors that may create incentives or pressures for management to commit a fraud or permit opportunities to do so. Recognize that improper revenue recognition is a fraud risk, in particular, where judgments and estimates involved is high. Ind AS 115 is one such classic example of a standard where there's lots of judgments and estimates in revenue measurement. If audit process determines that evidence of fraud may exist, the auditor should consider the organization's position and report it to the appropriate authorities. Often, there have been concerns about the independence of auditors. Those arise in the context of appointment methodology, a significant part of audit market space being occupied by a few firms, high cost of audit of public interest entities, and increasing complexity of business operations. Also, one could perceive changes in personal value systems because of increased materialism that the world went into. And I have personally seen over a period of time with the nuclearization of families, which I duly respect, and myself culture, I come across several who are so unmindful of their actions and what the society would think of them. At least my generation and many of us are so very concerned that anything we do we are accountable to society, but not necessarily true the way some of the value systems are changing. There's an increasing awareness that the line of difference between profession and business is thinning. For a pure Chinese wall to be built, audit firms, my personal view, must focus only on certifications and assurance. Everything else should be in a different entity that maintains an arm's length distance. Mere departmentalization within the firm will not help. The earlier firms understand these technical niceties and make necessary adjustments, the faster they will step into the growth track. UK, the law is coming for separation it, and there are some of these large firms in some jurisdictions. They have gone on to give a voluntary statement that we have given up non-assurance services and it's done in a separate entity, and India will not be far behind. Trend 5 on Code of Ethics. Professional independence should be felt, experienced, and be visible. I'm using the words carefully. Should be felt, experienced, and be visible, however tough that may be. This is the hallmark of any profession, and this is what will bring in trust. As is the profession of medicine, ours is a profession of trust, and so our work must be executed with a hint of interdependence. I'll give a very simple example. Our signing partner attending lots of social gatherings of a client, it is very probable, highly probable that the audit staff might tend to become a little complacent in those cases. That is an example of the independence, the points which I mentioned, that it should be felt, experienced, and be visible, not just for the client, not just for the outsiders, even for the engagement team. They should know that the signing partner is quite independent of the client. Only then they will also get the confidence to be independent and carry out the work. The new version of Code of Ethics, effective 1st July 20, is a significantly large document. By imposing restrictions, in particular for public interest entities, on taxation service to audit clients, introducing assessments for threat to independence, and specifying reporting obligations for non-compliance with laws and regulations. The new Code of Ethics shows that the heart is in the right place. For it to succeed, we need to follow it in letter and spirit. After all, it is easy to bend the law without breaking it. Some of the provisions, especially relating to networks, might appear onerous, but if we have to pass the test of public scrutiny on independence, we must follow it. Independence is a foundation for trust, and in an audit opinion, it is worth walking that extra mile to protect the respect for and enhance the stature of audit profession. As the profession evolves more carefully, we will see a lot more changes to the code to keep it current and modern. The firms that move the distance from being good to great will practice both value and ethics in thought, deed, and action. Trend 6, penultimate trend. Global trends will affect India. 2 reports merit attention. Sir Bryden report in UK and of the International Forum of Independent Audit Regulators, IFIR. At the instance of BIS UK, Sir Bryden undertook an in-depth review of audit quality and effectiveness. December 2019, his report was placed in public domain, and it called for some path-breaking changes. A few of them is redefine the purpose of audit, introduce the concept of suspicion, and enhance the informative nature of audit report. Similarly, IFIR, in its 3-year strategic plan, is focusing significantly on how audit quality can be improved, including role of audit committees in different jurisdictions and how auditors are selected and performance evaluated. International Audit Assurance Standards Board have issued a discussion paper on fraud, going concern, assessment in financial reporting, seeking views of practitioners, and I would encourage all of you to read the same. The audit firms of 2030 are those who will keep a constant vigil on the global best practices and developments and internalize them to the extent possible. The last trend, trend 7, anywhere, anytime, anyone. And for those who are coming from tier 2 and tier 3 cities, this is so very important. I'm a strong believer that just like accounting services for the Fortune 500 companies of the world is done in Pune, Gurgaon, Chennai, Bangalore, audit services for any client across the world can be done in this connected world, technology world. It can be done by anyone sitting anywhere. I can be sitting in Thrissur and audit IBM. So when auditing IBM, it doesn't matter whether I am at San Francisco or at Thrissur. IBM's accounting records are in Gurgaon. IBM's management sits across the world. Operations are across the world. And with a connected world, it just doesn't matter whether the audit firm is based in Seattle, based in San Francisco, or based in Thrissur, Palakkad, or Kannur. It just doesn't matter. This is waiting to happen. The infrastructure was in place. Competence was there. It only needed a push and societal acceptance. COVID-19 gave us just that. Even as audits have gone beyond the paper and pen phase, and with global audits already being done from remote locations, I'm sure last year many of you have done your client audits, whether it's 10 kilometers away or 1,000 kilometers away. When you're doing it remote, it just doesn't matter. The next jump will be carrying out reviews from anywhere you are, office, home, or cafeteria. As the world steps into a new order of freelancing, as opposed to full-time employment, as travel becomes increasingly cumbersome, and as Generation Z steps into the workplace, audits from anywhere and anytime will become the norm. A Thrissur-based firm can have 30 of its staff members coming from different parts of country and different parts of the world, where you can have the best of the talent on your firm's roles to perform the audit job. It just doesn't matter whether the person is sitting at a home within the Thrissur postal address or sitting in Guwahati or in Abu Dhabi. It just doesn't matter. Footfalls in client place will drop, just as footfalls in audit offices dropped during the last 20 years. I have witnessed, and there are many senior members here, I used to see a situation where clients used to walk into audit firms regularly. Today, you hardly have clients walking in. Similarly, auditors walking into the client's place will also become posterity. It will also cease. With artificial intelligence, no data entry, blockchain, big data, machine learning, the world of accounting is changing. People will not log data, machines will. Already, many accounting applications today can put the smartest of analysts to shame with the speed of execution and dexterity of operations, and importantly, consistency and quality. Neither accounting nor auditing is so quickly going to disappear. As long as there is cricket, there will be scorekeepers and umpires. Accounting is scorekeeping. Auditing is umpiring. What's changing is how frequently we want to see scores, in what mediums we want to see, and how much of it can be digitalized. The firms who will lose out are the ones who are not seeing the gathering storm and not getting prepared for it. The codex of the world. Have an influential culture, modernize, and use emerging technology, and you will win. Today is perhaps the best time in history to be in accounting and audit, as the world of work around us is changing incredibly right before us. Thank you all for your patient listening, and sincere thanks to all the 3 branch chairman managing committee members for the invite. Stay safe, stay accountable. Thank you all.
Thank you, sir. MP, sir. You have explained the importance of audit report, auditing of standards, performance of audit procedures, and judgment of the clients and its activities and other things, and the importance of scaling of the operations and all other importance of an audit firm and assurance services and audit services, how to be separated and things. Thank you. Thanks for this. Even though it became a little long.
I'm so sorry about it.
No, it's okay, Arun, because that is set the perspective.
Time after that one, it's I'm very sorry. I could not control also. I'm very sorry that one. Yeah, thank you, MPV sir. We are thankful to on behalf of the managing committee and
thank you all, and
apologies,
Jomon, I ate into your time. So
no, sir. You said the perspective between us, nothing like that. And 200 plus members have been really enlightened the shape of things to come with your global interaction exposure, the council meetings. So this is something which all of us should wake up to. That is said, made my job easy actually. In fact, many of the things you have a macro perspective given, then I'll touch upon some of the specifics. Sure. Wonderful discourse, as not unexpected of you.
No, so kind of you.
Thank you, sir. So chief guest is because he has another program. Thank you, sir. Thanks for joining us and for inaugurating us. Thank you. Over to you.
Yeah, sir. Now we are moving into the program. Before that, let me call upon invite CA Arun Subramaniam, Chairman, Kozhikode branch of SIRC, to introduce the speaker of the day.
Good afternoon, all members. Today, I take this opportunity to introduce our well-known faculty and well-known member, JOMON K. George. CA JOMON K. George is a fellow chartered accountant, and he has almost 28 years of diversified practice experience. He has been the past chairman of Southern India Regional Council for the period 2019-20. He is a founder and managing partner of JVR and Associates, an eight-member partner firm specializing in corporate audits and consultancy. He is a regular faculty for auditing in the Institute of Chartered Accountants of India and has taught almost 10,000 plus CA students. He is also a peer review trainer and also a member of Auditing and Assurance Standards Board of ICAI. He was the chairman of Ernakulam branch of ICAI for the period 2002-2003. He has traveled extensively in UK, Middle East and Far East. He has also taken the post of president in Rotary Cochin Central and also at various other social clubs. He was an honorable secretary of the Kerala Management Association. Recently, in February 2021, he has authored a book, Trails, Pinpadangal, Reflections of Personal and Professional Life. He is also a member of the advisory board to St. Teresa's College, Ernakulam. With these few words, I introduce the speaker of the day, CA JOMON K. George.
Thank you, Arun. Good evening to all of you. The chairman of the lead branch, Trichur, my very dear friend, CA Adin KK. Another dear friend, Arun of the Calicut branch chairman. Vinoj Menon, chairman of the Palakkad branch. You are equally dear, Vinoj. Managing committee members of the 3 organizing branches in absentia, the reservoir of knowledge, MPV, who has set the tone for this entire program. Maybe even I was just sharing with Arun that, but then all the about the time, but then all the points he has brought up today or discussed today are quite relevant. The 7 touch points about which we have to be concerned if we are looking into the future and not being too complacent about where we are and what we are today. Very respected senior members, many of the past chairmen of these 3 branches, I can see them on screen, and 205 participants alphabetically from Akash to Zakir Hussain, who are glued with us this evening to be part of this 3-day empowerment program on standards and auditing. Once again, a warm good evening to all of you. Hope you're all staying safe. We're really sad that we have lost some of our members in the second wave. Mr. Satyavagishan, past chairman of Trivandrum branch. Ajit M.A., very young member, 44 years, from Alua, who was the partner of Sajiv, past chairman of Ernakulam branch, to mention a few. All of us have to be extremely careful, and I think we have to take the caution. The test positive rate all have come down, and still we have to be extremely cautious until the pandemic is fully contained. I'm extremely delighted to be part of this, or rather the opening batsman for this 3-day program. MPV concluded with an analogy we all like in cricket, the scoring team is compared to the accountant, and the auditor that we are, auditors that we are, ours as compared to the umpire of the match. So the matches for this year, financial year 2021, we are standing at the threshold of the audit season, and it's quite fitting and timely that these 3 branches have come together to organize this program. A big thank you for inviting me to be part of this, and happy that I could contribute in terms of connecting Bhavani ma'am and Aniket, who have much more expertise than me. Bhavani ma'am is ex-Deloitte partner learning, and Aniket Talati is Center Council member and is son of the former president Sunil Talati sir is from Ahmedabad. So all of them we will have online. And I'm extremely happy that with this virtual meetings catching up, the stiff competition spirit between branches have actually melted off, and we are almost together. Parallelly, I think Kollam and Alapi is doing something, and next week we are doing a similar program on accounting standards for the southern region, southern area branches like Trivandrum, Koilon, Alapi, and Kotte. So it's really nice that we are able to harness our capabilities together, and collaborative exercise. That's why we have 204 members still on an afternoon like this, where it's rainy, and one has one is tempted to sleep after to have a well-earned afternoon snooze, probably after heavy lunch that you would have had. Doesn't matter. The spirit of learning brings us together on this platform, and thanks to Zoom and other possibilities that technology has brought about. So this is the introduction, and about the standards and auditing. You would appreciate that when this council took charge, the new council took charge in 2019, which would lay office in 2021 December with the elections. The 2 topics have been made mandatory for program organizing units like branches and regional councils. 1920, you gave me the great fortune of serving the southern region as the chairman, and where at SIRC, 2 of these topics were given absolute thrust, and reaching out to branches, disseminating knowledge on standards and auditing and code of ethics. Precisely because of the many things that MPV has mentioned, the audit quality concern, fraud detection, and aligning with global trends. So the new code of ethics is in alliance, or probably is quite in tandem with what is happening globally. So all those are core learning topics as suggested by the institute. And we talk about standards and auditing. Many of you should recall that maybe 5-6 years back, the session on standards and auditing, it was very difficult to get an audience, particularly branches in Kerala or remote branches, I would say, mofussil areas like maybe smaller towns like what we have in Kerala, or maybe a town like Trichy in Tamil Nadu, or Belgaum in Karnataka, saying that, oh, this is all for large corporates. But MPV, I think, very explicitly made it clear that standards and auditing have equal applicability to large, small, medium kind of entities. And in fact, for Palakkad branch, I think Mohan sir is there. B. Mohan sir had once suggested that we should do a program on applicability of standards and auditing. That time we used to call them auditing and assurance standards. The new name is standards and auditing for SMB, small and medium practitioners. Then I just made a reference and found that yes, small and medium practitioners, yes, we are chartered accountants. And when it comes to expression of opinion, I'm talking about the applicability now. Expression of opinion, the standards and auditing will squarely apply. There is no category-wise distinction as we have in accounting standards. So this will squarely apply to all entities and all practitioners. But here there are certain situations where this may not be applicable. Company audits, naturally, yes. Non-corporate tax audits, yes, where we are issuing Form 3CB. In Form 3CB, the auditor's report, there is expression of opinion, true and fair. But if in 3CA, the corporate audit has already been done by either by the same firm or some other firm, we are referring to that report and there is no opinion. So in the case of a corporate tax audit, the applicability of or standards auditing are not applicable. So corporate audits, non-corporate tax audits, yes, they are applicable. And today for non-corporates, there's a separate classification. I would like you to refer. I'm bringing out a paper. I would like to share with you the latest journal, which carries a very detailed article on that is the journal. Is a journal which is of April 21. There is a very detailed article on categorization, that's accounting standards. So here, the standards and auditing, yes, squarely applicable, big and small companies and non-corporate audits, 3CBs, and for all of us that practitioners are. And in every standard which you're going to discuss now, what happens is we have a 2-hour session. I'm being a little candid. I think I was just going through the participants list. I think I can use a little bit of Malayalam also in between. I would like to be a little candid and asking this question: are we really doing this, or is it for? I don't think there's a shortage of CPA credit now. Therefore, are we doing this just for the sake of it, or are we going to learn something from here and apply it at the work desk? The second part is very important. The learnings, the insights, if you are getting something out of the session, which I hope I'll be able to deliver up to your expectations. This is, for me, this is a second in the series. 2 weeks back, we had done a similar program on certain other standards too, combined again with the Madam Bhavani Balasubramaniam for SIRC. We had about 600 participants there. So this trend is picked up for this season. Therefore, the action point after every standard, we should pause. We can have some interaction either through the chat box, or you can unmute yourself and ask questions directly. I'm doing this with the permission of the 3 organizing branches chairman. So once again, extremely happy to be part of this collective, collaborative learning exercise. Thank the organizers for this opportunity. With that introduction, let me try to share my screen. Is it visible?
Yes, yes, sir, it is.
Yes. Trichur, Kozhikode, and Palakkad branches of SIRC. Now, the names are Thrissur, Kozhikode, and Palakkad, not Palakkad. MPV asked this question, but force of habit, no, that went unnoticed. So my apologies for the names. Institute, it took some time for the institute to change after the names were officially changed by the state. So standards and auditing, we are here on 27th May. Quickly on the history and evolution to understand the basics, because today we have in our audience, typically we have young members who would not have that kind of great exposure with medium or large size firms. We have returned NRIs who are now planning to set up their own shops or joining a firm. They're back home, come back for good. We also have retired people, retired people from banks, government jobs, some people shifting their jobs into practice. Therefore, this understanding is very important. So please allow me to touch upon, maybe take 5 to 7 minutes on the very basics. History and evolution. The Auditing Practices Committee was set up as early as 1982. You know, the institute was set up in 1949. Accounting Standards Board came into existence in 1977. And the APC, Auditing Practices Committee, was set up in 1982. And the seniors would remember that we all studied statements on standard auditing practices. SAPs. Then in 2002, the board was renamed as AASB, Auditing and Assurance Standards Board, with the international terminology. and they started issuing AIS. I remember in one of the meetings when Chiryange Baby, now the managing partner, my guru of Varma and Varma, came to Cochin. So he said, earlier they used to sap our intelligence. Now they're making an ass out of ourselves in lighter way, unquote. So this is whether we like it or not, they have come to stay. And now it is 13 years. Many of us have not really got sight of the importance of this. A new preface was issued to statements, to standards on auditing, review engagements, assurance services, and related services in 2008. That made a huge difference in the sphere of auditing, the classification and the applicability of it. And I didn't mention that I am a member. I'm not a member now. I was fortunate to be a member of the Auditing and Assurance Standards Board, and had a good opportunity of being in the thick and thin of the institute's policy-making process. It was at that point chaired by Amarjit Chopraji, who later became the president of our institute. Today, he's the mouthpiece of our institute. And when it comes to media and other interactions with the outside world, or probably representing the institute very effectively. It was a great learning experience, 11 meetings in Delhi and one in Mumbai, where we also had the interaction with the then IFAC president, Graham Watt, in Mumbai, the last meeting. So I have touch felt, I have really experienced, and very humbly, I would say that I could contribute as well as a very young member at that point of time, 2005-06, in the deliberations that is happening, the efforts that are happening in bringing out guidance literature for practicing members. The big question is, are we responding enough? I personally feel that we are not responding enough. I'm not trying to preach here. So today, if audit quality is a concern in the future, if fraud detection would also be part of the auditor's job a little bit, looking at the reporting onerous, maybe onerous MBB said it's not maybe onerous, it is onerous. CARO 2020 is onerous. And the recent changes you have seen in Schedule 3, the format, the reporting, the detailed tabulations which you have to give on the aging of receivables, payables, share application, all those things, they are all aligning with the new reporting regime of CARO. Going to be really onerous, difficult, and one has to start, because all those changes, CARO 2020 and Schedule 3 amendments are applicable only from financial year 21-22, not for this year. 2021 audits, what we are discussing now, CARO 2020 and Schedule 3 amendments are not applicable. But it's high time after we started deliberating on this, and also when we prepare 31-3-21 financial statements, we may have to have a mirror of we call it as a memorandum, P&L and balance sheet, and disclosures for preparing for next year. Well-meaning corporates have already started doing that. So this new preface made a huge difference. And now we have a new classification of standards. One set called SQC, Standards on Quality Control. Then the other set is called Engagement Standards. They are further classified into standards on auditing, standards on review engagements, applicable for limited reviews that we do quarterly and half-yearly for debt-listed entities, standards on assurance engagements, certifications on all that we do, that which is not audit, but it is validation. Thirdly, standard on related, fourthly, standard on related services. Hope some of you are the younger members, at least may be noting down this, but even if you're not able to do that, don't worry. I will share these slides with all the three branches. I request the chairman to share it, or probably put it on the branch website. That's the best thing, so that they can access and take downloads. So the big question which we ask is, why do we need to comply with standards? All right. Okay. So to expedite audits effectively in accordance with generally accepted auditing practice. Now, generally accepted auditing practices, again, I was referring to smaller towns or smaller cities. Recently, a friend of mine, a senior chartered accountant, who's practicing in Central Travancore, got a letter from the SFIO. SFIO, I hope you all know, that's the Serious Frauds Investigation Office. He had done the audit of 2 group entities of an NBFC group which ran into trouble and which had a huge investigation. He had done work reasonably well, but the letter from SFIO was addressed to him and saying that Dear CA so and so, please furnish the following in connection with the audit of XYZ Private Limited Company, ABC Private Limited Company. Proof that, please listen to, this is not my version, SFIO version, proof that the audits of these companies for 3 financial years I mentioned have been done in accordance with generally accepted auditing principles. That is to say, in compliance with standards on auditing. The audit of a small, 2 small private limited companies by a medium-sized firm, not even medium-sized firm in Central Travancore, and letter from SFIO. So the regulators are much better aware of what is that an auditor should do. And today, we as a profession, individually and collectively, our president recently also made that mention that the auditor is only a watchdog, not a bloodhound. Kingston Cotton Mills case, if I remember correctly, was delivered in 1872. But our profession has been using it as an insurance policy, saying that we'll do only this much, and therefore you say that the audit is over. But things have changed substantially. The regulatory framework has changed substantially. The legal framework has changed substantially, which will become clear in the next 2 slides. And therefore, the auditor cannot just be a watchdog. If not a bloodhound, as Amarjit Chopra said in one of the recent interviews, at least be a barking dog. If you look at SA 240, which MPV mentioned or referred to, 240 in the fraud standard, the auditor's responsibility on detecting fraud in financial statements, it says that the auditor has to become a whistleblower. And in an extent where it is found to be very serious and having an impact on or creating jeopardy for the public and the corporate world, he should blow the whistle loud enough for the regulator to hear, report to the regulators, not just to the shareholders. To that extent, the expectations have changed and the standards prescribed, but we are still thinking, okay, Kingston Cotton Mills case, I will be a watchdog, not a bloodhound. This cannot be an insurance policy anymore, which is evident from many of the recent actions taken by the new regulator, NAFRA, National Financial Reporting Authority. We'll come to that a little later. To utilize resources effectively, your domain knowledge, the time we bring in, the time we have, the students we bring into the audit, the audit managers we get into the audit, they're all resources. They have to be utilized effectively in an optimal fashion to guide and assist, direct supervise assistants properly. All of us have come out of that difficult times of not having sufficient number of students or article clerks. Today, it is a chartered accountants market, not the students market. If you're a well-meaning firm with an academic culture, students will keep knocking your door. That has been our experience. That has been well demonstrated. I'm sharing with from my experience. So moving on to ensure quality control, that's our first standard today. Detailed discussion on SA 220 is on quality control for audit work. Okay. To disprove charges of negligence, today our country has not become very litigative rather in the field of for charging auditors, but in the Western world that is almost everyday routine. Any investor, I'm having a slight throat problem, so please excuse me for sipping tea in between. And to disprove charges of negligence is very important. And in that also, the very impersonal basic question a court or a disciplinary committee would ask us, have you done the audit properly? Yes, sir, I've done the audit properly. Have you come? Then the next question is, explain how you have complied with the standards in auditing issued by 45 of them, wherever applicable, issued by the ICAI. Then probably you may not have a very firm answer. That is the purpose of having this program on essay. Today, tomorrow, and day after, you'll get new insights. And with that new insights, I think all of us, me included, should applying it at the work desk with more of commitment and more of a conscious thinking that yes, audit as is, we are acting as umpires on financial information, a judge on financial information, and we hold out to the public in many of the cases. We hold out to the income tax department, we hold out to the MCA in various cases, then to shareholders as well. So therefore, that's very important. And lastly, to face and pass a peer review. Ask a question, if your firm is subjected to peer review, will you pass? I asked this question 5 years back, and I asked my partners to request the peer review board to take up a peer review of our firm and get a peer review certificate. Let's see whether we are you just preaching I have been talking about auditing standards, accounting standards. Am I just preaching, or are we able to practice? Are we practicing enough? We had some internal introspection, internal partners meetings, took a feedback from the students, the third year students who are reasonably familiar with the standards, seeing that what our compliance level. Today, MPV was talking about what is it? Audit quality maturity level, and audit quality maturity level, and that is a new thing which they are going to do. Like digital competency, DCMM, which was issued by the DAB. Again, MPV was part of that, and many of the council members very actively there. So audit quality maturity is a key question. And passing peer review is a good test. But today, peer review process, I personally feel that from my experience when our firm was peer reviewed, that the questions should have been stronger, deeper, and more pervasive, I would say. But then we passed the test, and the peer review certificate is prominently displayed in the reception of the office, saying that our processes are mature. That's actually branding. Those are things which we have to do. We do not have to advertise in the papers. So when the clients come in, and we send a mailer to our clients, just to our clients and some of the well-wishing friends, just to our clients, saying that we're happy to inform you that we have been granted the coveted peer review certificate by the ICAI, which is proof that the processes are mature and that the audits are being done properly. Still, there could be lapses. Still, there could be shortcomings. No one is painting oneself as a paragon of all virtues or the best practices. Still, every day we try to improve. And the baseline of our firm, JVR, is bigger, better, bolder. So improving the better deals with how can you improve the way you deliver, how you render yourself, how you interact with your clients, in your communication, in your compliance with standards, and so on the story goes. Lastly, and very importantly, my dear friends, when it comes to corporate audits, forget all what the institute says for a minute. It is very much important, but that per se does not have statutory teeth. This is there from 2013, 8 years down. Are we really aware that the Companies Act in 143(9), Chapter 10 of the Companies Act deals with audit and auditors. 143 is section in Chapter 10, which is captioned rightly as powers and duties of auditors and auditing standards. Powers and duties of auditors and auditing standards. In that, the subsection 9, it's a very powerful line. Every auditor shall comply with auditing standards. Every auditor. It's not normally a provision of the Companies Act would say that every company or every director. Here says every auditor. It's a first-hand responsibility on the auditor of company. It doesn't say of a large company. It doesn't say of a private limited company. It doesn't say a government company, non-government company. No, nothing. All companies who are registered under the Companies Act 2013, the auditors of these companies have to comply with standards without any exception. Without any exception. This is a very, very important point. And today, what's the difference? Till 2013 Act came, it was only a dictum of the institute on its members. And failing to comply with standards, yes, the institute could take disciplinary action against you. Disciplinary action. Again, in this journal, because we have more time now to read, in this journal, it talks about disciplinary action for non-compliance with SRS 4410. We will leave it for the time being, SRS 4410. It's a standard on related service, compilation of financial statements. But time permits, we'll revisit SA 3400 also. Now, with this, today, company, the MCA can take action against you. NFRA can take action against you because it's part of the statute book. We cannot say that we cannot plead ignorance. And it is evolved now 8 years now. Okay. So this is an unfortunate remark which is made by one of the former MCA secretaries. Seeing many of the audit lapses, like ILFS and all that, he said, we do not expect the auditors to see the needle in the find a needle in the haystack. But at least see the elephant in the room, which means that audit practices have become very casual, very passive. As MPV said, frequent clubbing with the client and all that. We say that, okay, If somebody gives you a trial balance, prepare financial statements, put your signature therein, and don't forget you didn't. From my side, I'm saying this. And then with that, we are going to say that, yes, the audit is done. No, the audit considerations still are of paramount importance. Even when technology takes over, MPV's one point was that rise of automation. Yes, we are getting used to that. Today, I'm in office today. Two of my partners are not in office, but they are working from home. With very little investment, we could enable that work from home technology. And the students, many of them, 30 of them kind of are assigned jobs. It's being monitored for a very, very small investment. I'd be only happy to share with. In fact, I'm working on a paper, or rather a presentation on though it is not my core area, seeing that it is not that complicated on how technology can effectively be leveraged on working from home, because we still hear about third wave and fourth wave and things like that, wave after wave. So then tsunami of new diseases, different versions, yellow, white, green, okay, so like rainbows. So therefore, one has to be careful, and technology we have leverage on. Coming back to this particular point on the comment, it's very unfortunate. And he's not in service now, he just finished his term and is moved out. But then it's just blind shaming of the profession, or some force, and it is for every one of us to introspect. I'm not here to comment upon this. I thought this may be relevant when we get into a discussion on essays, particularly the one deals with quality of audits. So with that, let me move on to the specific standards. We will go in detail, touch upon the important aspects. Now, QC for an audit of financial statement. I said QC is, I would just give me a minute, yeah. QC is quality control for an audit of financial statements, SA 220. You may recall one of my earlier slides where it is QC 1, standard on quality control 1. The spirit of that which is there is expounded, little bit replanted in SA 220. The big question is, do we need quality in an audit? I have been teaching for 20 long years. When the class, I used to ask the students, how do you bring quality into an audit? You would get mixed responses. And I would ask a question, how do you bring quality into a sambar? If you have entered a kitchen and if you are passionate about cooking, making a good sambar. So somebody would say that, sir, masala, vegetables, heat management, sambar powder, all those things. So ingredients, heat control, of course, the quality of ingredients, the quantity of ingredients is also very important. It cannot be over-salted, under-salted, or over-spiced, under-spiced, etc., etc. So this standard deals with the specific responsibility of the auditor regarding quality control procedures for an audit of financial statements. The objective of the auditor with relation to this standard is to implement quality control procedures at engagement level that provide the auditor with reasonable assurance that audit complies with professional standards, regulatory and legal requirements. Now, this may sound theoretical, but look at the simple reading of it, that the auditor should ensure, rather say that the auditor should have quality control procedures to ensure that the audit is compliant with professional standards. Now, let me go back a little bit. Now, we started with 220. We came jumping over 2 standards. I hope you are familiar. Younger members may be more familiar now. SA 200, that is the overall objectives of an auditor and doing an audit in compliance with auditing standards. That sets the basics. And one thing which is new there, which is today largely amplified in the wake of COVID in SA 200, is about the professional skepticism. Being skeptical. I said the barking dog versus, or rather the watchdog versus barking dog and so on. We will see that towards the end of this presentation when we come to SA 570 going concern, which is a very important concern today. Now, the professional standards are the standards issued by the regulatory and legal requirements. Legal requirement is very important. You're doing the audit of a company. 143.9 is there, standing tall, asking you to comply with all the auditing standards. And the regulators' lens, we are under the surveillance than ever before by multiplicity of regulators. And one has to be extremely careful. And think of SFIO writing a letter to a small private limited company auditor asking to give proof that your audits are done in accordance with standards and auditing. What more do we need to be aptly listening to or the sessions on standards and auditing, to be reading on every day, because today we live in such a dynamic environment. Everywhere is changing. So I think 10% of your time, instead of slogging it out to past midnight for the clients, I think we should empower ourselves. There's something which I have to say towards then. Time permits, we'll surely discuss. Personally against this habitual late sitting, which is creating a lot of health problems for our members. Back pain, all kinds of problems, work pressure, work strain. I know many of the young members who have had health problems. In fact, there is one person from a multinational firm who is only 43. He came to me, and to cut the long story short, he was willing, at the age of 43, he was willing to work with our firm for 50,000 rupees a month, for the reason that he was burned out rather, at 43. He had a heart attack, purely out of work pressure. I just asked him, oh, is there domestic pressure is another problem? So I asked him, no, he is having a happy family. He opened up really and said that, okay, so this is my problem. I don't want to get into that environment. Okay. Many of us follow that very ugly practice of working too late and working on Sundays and things like that. Take life a little easy. And I think there's a lot of scope. We can add to the size. If the workload is getting increased beyond this thing, get a new partner, get an audit manager, get more students, use technology. So therefore, that is something. Now, legal requirement is Companies Act, I did mention. And also that the auditor's report issued is the most appropriate in the given circumstances. MPU did mention about SS 706. 705 talks about the four types of audit reports: clean, qualified, adverse, disclaimer. One is that, yes, X is a good boy. B, X is an okay boy, except for. The terminology we use today is not subjective, it is except for. That is a qualified report. 3, adverse opinion. X is not a good boy. Don't go near him. Okay. 4th is saying that, oh my God, due to these circumstances, it may not be appropriate for me to opine about him, to engage with somebody else. That is, in layman's terms, the disclaimer of opinion. So here, the auditor's report in the given circumstances, we cannot issue a clean report where an adverse should have been issued, and we cannot issue an adverse report where a clean report should have been issued. Normally, that doesn't happen because when you have any reservation, today in the new auditor's report, there's a paragraph called basis for qualified opinion, basis for adverse opinion. You have to list down the reasons. You cannot just say that, hey, JOMON is not a good boy. Why? Why is no, don't ask me why he's not a good boy. You cannot make such blanket remarks about that. Therefore, auditor's report issued has to be appropriate. That's a quality control aspect. Yeah, that should take care of. Now, the requirements about the quality control is that leadership responsibilities. Now, some of us are small firms, some of us are aspiring to grow. Today, we have networking guidelines, alliances, and all that coming our way. So, but then in every audit, the captaincy has to be very clearly established. The leadership responsibilities, ethical requirements, one should be clear of. Independence should become part of the culture of the firm, part of the DNA of the firm, I would say. And very important to have a policy on acceptance and continuous appliance relationships. It is not that we take into account, somebody says that, please do my audit. We do not jump for it. We really have to do the screening. We have done it so many times. Okay, that's fine. Looks good. What's the business? Good. What are the directors? XYZ. Or if that person is there, sorry, because we know from our friends, from what is being heard about, and from our experience with him in some other forums, is that he's not an upright person. We cannot associate him. Sorry. Even if the fees is very high, we do not want to associate our name with that. That's the initial screening that we do. And sometimes what happens is after accepting an assignment, an audit assignment, then it can happen that the client, due to various pressures, take for example, the difficulties caused by COVID. Going concern, many of our businesses are finding it difficult to pull on. Tourism industry in Kerala has been so badly affected. Ayurveda, which has been a great earner and Ayurveda, that pulses more in that area, Thrissur, Palakkad, Kozhikode, we have Kottakkal, all those places where, nobody is really coming. So there are a lot of difficulties. So it's possible that the management, in given such circumstances, managements also become, maybe they were good boys, good girls, but then due to these circumstances, try to hide information, or they get into some unfair practices, accepting some colored money or some kind of a fraudulent practice, all those things. So therefore, we may be able to, we may not be able to continue. Therefore, say slice off. So that is about that's also quality aspect. You know, the client, the texture of your clientele, the composition of a clientele is also a factor of, because if you have a client who's so very demanding, I've been fortunate to have some clients who have never asked for, not everyone, there are pressures like every one of you have, who have never asked for any kind of when I say that, this is finally, when we discuss on the provisional draft financial statement, this is a position. We have so much of loss, what happened? The GP has gone down. And some sensible analysis say that, oh my God, then let us forget it. Let's finalize like this. No covering up, no add-ons. That's the way it should be. And the requirements as we continue, assignment of engagement teams. This is for larger firms, but I would say even when you are deputing an assistant, make sure that that is engagement team. A medium-sized firm with 2 partners. One partner is in charge of an audit. He is deputing 2 article assistant, 1 article and 1 trainee for an audit. So the audit team is that partner who is the captain, leader, and then these 2 students. Instruct them properly. Direct review, consultation will come to a little later. So assignment of engaged teams is very important. We cannot do it in a very half-assed fashion. Go do the audit. It really doesn't make sense. QC review, quality control also has to be reviewed over a period of time. Monitoring the quality control and document the quality control. So now coming back to the basics before going into the slides. According to me, there are 3 things which are very important in quality control. One is a mindset saying that I will put more of thrust on quality of the products that move out of my office. What is the product? The auditor's report, the financial statements, as per our report of event date attached, the auditor's report, the opinion, which is auditor's report is just a medium, the opinion which is going along with this, or there's a certification. Today, the validations that we do, multi-million dollar valuations that validations that do for the government. That is where Modi ji once said, the CS signature is more valuable than mine. We are not just giving a pat on the back, hey, you're doing a good job. No. He said, your signature is being relied upon by government, state and union, banks, financial institutions, so many people. So be careful, be judicious before laying your hand on. That is where your signature will become more valuable than mine. That's a very strong message here, sir. So one is this mindset, which is very important. In fact, our firm has a mission statement. I'm not saying that it is extremely good or absolute, but the mission statement of our firm is to emerge as a credible and sought after firm of public accountants by adhering to the highest standards of governance. Standards of governance would include compliance standards, auditing standards, and the regulatory framework. Leveraging on domain knowledge, that's very important, which sends a message that yes, you have to update your knowledge, and then latest technologies, and by having a spirited team of professionals and aspiring students. This is a mission, or rather the QC statement of our firm, QC tester. So the first one is a mindset. The second one, I will come to the specifics of the slides. The second one is very important, to have proper processes in place when it comes to auditing, file maintenance, collection of evidence, planning. Let me ask you a question in advance, because I don't think we are covering SA 300 today. No, we're not covering 300 today. SA 300 is on audit planning. Let me ask you, you may be doing audit of large, small, medium companies and non-corporate entities. Do we all have an audit program? Do we have an audit planning memorandum? These are questions which we would ask. So after this 220, we will introspect and ask these questions and say that if not, the action point is that I would be more quality conscious. That feeling will percolate down the office. It will become an office culture or DNA, as I mentioned, and so on the story goes. So SA 300, I'll ask this basic question. Is about the audit program and the audit planning memorandum, which are very important, which are mandatory. And going back to SA 210, agreeing on terms of audit engagement, agreeing on terms of audit engagement. Do we get a letter of engagement before we start the audit? If not, we should get it. because we're not dealing with the standard in specific in this session. SA 210, the action point is, I will not start an audit before I get a duly signed letter of engagement from the client. LOE, we call it in our office, which is mandated by SA 210. Jumping over again to SA 300, audit planning. I will have an audit program and downloads are available. You just go to Google up and see audit program. Then you have to customize it. And if you still have a problem, shoot me a mail. I'll share the audit program of my firm with you. There's absolutely not much of IPR in it. A lot of thinking work has gone into it, and it is evolved. It will evolve every year. Now look at CARO 2020. Audit program cannot remain as it is. A lot of new reporting points. Schedule 3. So in complying with the formats, it has to be customized. Change in line with the changing circumstances and the new statutory as well as regulatory requirements. So with that, processes have to be absolute. And then no process, no policy statement would be enough, will be effective without having a spirited team of people. What are the attrition levels? Are you able to retain young talents? These 3-year articleship students who come, they come and leave, but then in the 3rd year, they should be able to handle assignments very clearly, independently. And my experience has been that the students, some of them who have been found to be good, committed and focused on practice, have been absorbed as partners. Not overnight. They have been put through a process, about 1 year of waiting, and then after that, they would become partners. Not every year can happen. It depends on the growth prospects also. So therefore, what I'm saying is that we need to have a mindset, good mindset, positive. Then the processes are to be very strongly insisted upon. I'm again striking a personal note here, is saying that in our firm, there is a checklist for partner signing the balance sheet. Without having that properly filled up, ticked by the senior assistant and the partner in charge, it is signed by the managing partner or some other partner other than the partner in charge, which has made huge differences. Debate sometimes, fight sometimes, but at the end of the day, yes, compliances are better and we could get through the peer review process. So firm level, I did mention, individual level is what I said. That quality feeling of this message should percolate down to individuals. What audit JMO? Hey, letter of engagement, have you got it? Hey, get the letter of engagement. Have you filled up the first part of the audit program? Before the student is sent for the audit, have you understood the nature of the business? Yes, sir, I understood. Do you know that the home loan, from the home loan business, they have now started a vehicle loan business? No, ma'am, no, sir. So simple examples I'm sharing with. So QC policies and procedures should ensure that all the audits are done in accordance with standards auditing. That's the process part I mentioned about. QC policies should incorporate professional requirements, competence, assignment, delegation, consultation. Now, consultation is, some of us are very, very shy to consult with others. Even if they're close friends, we may think that that would be ignorance revealed. I have absolutely no problem. Last week, again, to give a live example, we had a complicated tax case. I took the phone, I have the freedom to do that. I called Veeramani sir. I call up Satyan sir sometimes, Satyanarayan sir, Varman Rama. They are all guiding lights when it comes to taxation. And I get a lot of calls from members about the compliance with accounting standards auditing. That kind of a sharing, most of the time without any commercial label attached to it, without any commercial interest, knowledge, learning, the spirit of learning together. A good question makes you think, JOMON, are you sure? Hey, let me double check and come back. So when you tend to refer. That consultation is also very important. Acceptance and retention, we have already mentioned. And naturally, the QC policy, that's what I said, should percolate down to the personnel of the firm. The managing partner says that high quality, there is a statement, in the back of us, like we have another, this is not a quality statement, this is a Celtic blessing actually. And there we say this, and then the students completely detached. There also, I'm seeing that many of the firms where the communication channels are not sufficient. The students are not workers. They come to many of our children have passed through this process. And they have to be absolutely communicative. How much ever we try, 10%, the new generation specialties there, approach differences are there. Our parents also said the same thing about most of us. About me, yes, it's a different because the perspectives change. But then we have to take them into confidence End of the day, we have to be objective in getting the work done and empowering them. It demands time, it demands commitment, it demands an attitude. So therefore, it's very important that we convey. I know one chartered accountant, I don't want to mention the city, where he will not talk to article students. Many of the firms have induction process. We were about to do one because this season we took 12 semi-qualifieds. 4 were one group, but then the Jan 21, the opt-out exam, Jan 21, all of them passed. So these 12 boys and girls are semi-qualified. So they have come in as a fresh batch, a fresh breath to the firm. So we were planning, we are still having that plan, an induction program, a one-day program in a good environment in a hotel where they would be given the culture of the firm, like the QC policies, basics of financial statements, audit considerations, GST basics, technology basics, Excel training, very sumptuous lunch, and if possible, disperse after a dinner. That's what we are planning. So that is how we build up a team. And without a team, how can we work? Are we continuing to slog like this with the hair growing gray? Can't happen. It should be ensured that the QC procedures are appropriate. The audit, this is theory. Moving on to consider the professional competence of assistants performing the work delegated to them when deciding the extent of direction, etc. We also have a practice of having fortnightly meetings by students in our office. They are asked to do presentations. So, and given the communications, there's a channel, the partners discuss with them the latest development. So they have to be empowered, kept abreast of the latest development. Supervision and review is very important. You send them for an audit, and finally, after 2 months, they come back and say, this is a report. No. Today, technology takes care of everything. It could be a OneDrive, it could be a WhatsApp group, all those things based on that. Belatedly, I am on WhatsApp now, those whom I mentioned. At that time, off WhatsApp, after becoming the secretary of Kerala Management Association, they insisted that I have to have a WhatsApp. And today, yesterday messages have been flying. I've become very active. So judiciously using, but even with said that, I think it is a lot of time is getting wasted on that, but no escape. Okay. That's about the quality control. So what is the action point? JOMON spoke about half an hour on QC, quality control for audit, SA 220. What does that mean? What's important? What am I going to do? My request is that to say that yes, like have a quality policy, and also ensure that processes are proper enough, mature enough to have a peer review certificate granted to you. Thrissur and Calicut, Palka, all these places are non-gold. So the institute says that your peer review certificate is a hallmark of excellence. Hallmark is something which is going to do with the grading of gold, right? I'm not very familiar with jewelry and gold, or rather bullion dealers audit. So hallmark of excellence. So QC should be there. And the third point is that I will have good people. I'll start developing a good team. I should take more care of my people. But it is like an investment. It doesn't, or planting a tree. It will take time. And then the seniors will take care of the juniors and so on. So I'll not be averse and indifferent to my team. As a captain, I'll take responsibility. I will very often give a pat on the back when a good job is done. And I'll also give a knock on the head when something is not done well. Okay, therefore, that's very important. I'll pay a decent stipend. And I will keep track of their, institute. Many of the cases I've seen that inordinate delays in filing Form 108, the completion of articles. Some students join, 103 is not filed with the institute. SSP, once we tried, it did not come through. It is the future of the student. 3 years. What if it was your my son or daughter? So those things, there has to be a partner who's taking up responsibility, slightly deviated from this point. So that was about SA 220. So action points are mindset change if required, processes change, having good team of people, and then making sure that, yes, we discharge audits. An audit report which is going out of this form, it is the most appropriate in the required circumstances. It is after taking into account all the audit considerations, planning, collecting the relevant evidence, documenting the work properly, and so many things. Risk assessment has been done, and all those have been covered. Even with that, it's not an absolute science. There could be loose ends. Frauds, ingenuously late frauds could not be detected. But then we should have, and our work should also be, talk about quality control. Our work should be defensive in a court of law before the disciplinary committee, failing which, serving as chairman of the Southern region in 1920, I was spending at least 2 days in Chennai every week. The disciplinary committee hearings used to be there. I've seen very senior members from our state, youngsters sometimes, because in a hurry, very passively done, they have been put up for, the disciplinary committee hearings. Standing like, I know, very difficult to say. And as chairman, I was told by the council members and the office that, sir, it is better, though they may be very close to you, but you are the chairman of the region. It may be better to avoid inviting them into the room, offering them a cup of tea, which I really wanted to do. Seen as culprits, maybe they come out clean, but recently I've seen a lot of DC cases where action has been taken. So that's about QC. I hope the point is clear. Adin, is it going okay? Ajit?
Yes, sir. There are a couple of questions which has come up.
All right. Let me see it's in the Q&A. Yeah.
Yes.
Sundararajan, post NFRA notification auditing standards are also becoming, Sundararajan sir, okay. Responsibility of the management as per 132 NFRA shall make recommendation to the central government on formulation, laying down of accounting and auditing policies and standards for adoption by companies, class of companies or the auditors, as the case may be. What's your view on this and what management is doing and should do regarding this for March 20? Well, this is not new. NAFRA is relatively new and it's gaining foot. It was in ILNFS, NAFRA took a very strong stand and it debarred 3 of the one former partner and 2 of the serving partners of a multinational firm and slashed them with penalties ranging from 5 lakhs to 25 lakhs. So the question here is, yes, the recommendations of central government on the formulation, laying down of accounting and auditing procedures. Now, the notification are now becoming responsibility of the management. Auditing standards cannot be part of the management's responsibility. In the auditing, what the management has to do is management has to be transparent. Management should provide or create a conducive environment for the auditor to discharge his work properly within the time frame, give all the information that is required, and cooperate with the auditor, not hiding anything. So the wording is that NFRA will formulate the good auditing practices and accounting practices to be followed by corporates. So corporates, when it comes to, it is more of accounting practices and not auditing standards. That is my view. How SQC 1 of the firm should be revisited from the perspective of explanatory memorandum on applicability of audit quality maturity model version 1.0. To be frank, sir, AQMM 1 I have not seen. I would like to admit that. And I would probably have a reference and come back to you on that specific question. So audit quality, naturally, yes, I did mention as a passing reference to the discussion on SQC, SA 220, that yes, audit quality maturity will happen. I would put it this way, that even without seeing AQMM, I can visualize some of the things which they would mention there, the questions which I asked, like having the team, the mindset, then compliance, like audit checklist. In fact, a peer review manual, if you look at the peer review manual, it would probably cover many of the things which would be there in the AQMM. I'm just guessing without seeing AQMM, I admit that. So the peer review manual, the lot of questions they would ask you is like file maintenance, documentation, SA 500 evidence, 501, which we are covering today. So with that, the SQC 1 and the AQMM will have a very strong relationship. That's what I presume. So with that, looking for more questions, I will resume my presentation. Yes. I'm trying to close the Q&A window. I hope it's not happening. Is the slide visible now?
Yes, Yes, sir. It is visible.
Yes, sir. Yes.
That you can close it.
Yeah, Q and I'm trying to close. Yes. ESF 500 evidence, audit evidence. Now, audit is all about an opinion. The end product of an audit, as a student sometimes, what is end product of an audit? I tend to say that a report. Today, a border sheet, print out 3-4 pages. Then we have, if applicable, IFC, internal financial controls. Then a CARO, then the UDIN. With all that, you have a report. But then, according to me, the end product of an audit is an opinion, which helps to determine whether it gives a true and fair view. Sounds very theoretical, but factually it is so. So just let's take an analogy. Is talking about, we have been getting a lot of calls sometimes. People call up a JOMON. This is Swanso here. I'm Suresh from Trivandrum. Do you remember one girl who did articles with you about 3-4 years back? Her name is, let's say, whatever. Said there is a marriage proposal. So what's your opinion about this girl? This analogy I would like to place here. So it's about a person. Here is about the financial statements, the disclosures, or financial information rather. The whole gamut of financial information. The financial statements, the schedules, the cash flow statements, the information that is embedded there, the underlying records, books of accounts, and so on. So we would say that what is the caution we take? This girl, Remya, has been with us for 3 years. She hails from such and such background. Her father is known to me. That's how she came to us. Has been a very wonderful student, very committed to the cause of the thing, a team player, very good ethical dealings in our informal interactions during our office tours, our dinner parties, all that. Very nice girl. Overall, we have nothing else, nothing against her. We would give her a clean chit. This is about 3 years she has been with us. So naturally, there are caveats in that. What is before that? What is after that? She is now employed in Bangalore. So she is with a multinational firm. So do the further inquiry. As far as we know, during this time, we would very strongly recommend her for. This is an opinion. But then for that, you need evidence, right? The evidence here we bring on the table when extremely aware about the opinion about that girl is that the interaction, the 3 years time, her behavior, her working pattern, her respect for seniors, concern for fellow people, respect for partners, principal, all that. So evidence, we cannot opine on financial statements without having the term they use is sufficient appropriate evidence. Sufficient appropriate evidence, that's the term. So information used by the auditor in arriving at the conclusions on which the opinion is based, anything of that, it could be visual, it could be printed, rather it's a written evidence, oral evidence, all that, anything that is relevant in forming an opinion will fall under the broad definition of audit evidence. Contents of SA 500 are introduction as usual, objective, definition, and finally the requirements. What constitutes audit evidence? And also deals with the responsibility to design and perform audit procedures to obtain sufficient appropriate audit evidence. What is sufficient? The quantity of evidence, the quantum of evidence that you get. Appropriateness talks about relevance, is the audit relevance. And gone are the times when we used to have 3 thick box files as vouching notes, verification notes, ledger scrutiny notes, and so on. Today, you are last year, after laying down chairman's office, when I came back to office, I started personally looking into some of the audits. So you call up one of the assistants, hey, Sauvarna, get me the file. I would like to have a quick look at the ledger scrutiny notes. Then the answer comes like this: Sir, other folder lunde, sir, folder lunde, adile Excel sheet itunde in the under audit folder, and so on. The story goes. So we refer to that, and then we say that okay, this is sufficient. Is the coverage sufficient? In terms of quantity is sufficient, and relevance is yes, has she really touched upon, has she been instructed, and so on. So relevant evidence. It is not having a bulk of information, it is being relevant. And all the audit evidence obtained, this rule applies. Objective is again the same thing. Procedures, design procedures to collect evidence. Requirements broadly, I have put it in a table. Information to be used as audit evidence, the auditor should see. Take, for example, debtors confirmation. We have a separate standard on balance confirmation. That's SA 505, external confirmations, bank confirmations, physical verification reports, confirmations from consignee agents, subcontractors, so much of them. RC book of all the vehicles which are listed in the fixed assets register, if there is one. We always say that requires updation. But then those are things which are going to get added thrust in the new CARO. And then selecting the items for testing audit evidence. We do an audit sampling, right? There's a separate standard on audit sampling. Artificial intelligence is set to take over this and say that it will do 100% verification. In fact, in one of the concurrent audits we restructured, we have strongly suggested they have started RPS, replacing people to some extent because it's so unproductive work and so much of a repetitive thing which is being used. So the item selection of judicious selection of items for audit evidence, stratification of data, for example. Again, coming to a resort in Munnar or Wayanad, there is a season, off season, and we pick up 2 months from there. And then because they're not homogeneous in terms of bookings, in terms of the traffic, in terms of the banquets they would have had, all that. So therefore we say that this is stratified and then we judiciously select out of that. Inconsistency in our doubts about the reliability of audit evidence should result in deeper dives, deep downs, drill downs the auditor should do. That is what SA 240 says in evidence. In fraud. It says that if the auditor smells a fraud, if he feels that there's something rotten in Denmark, something is shrinking, then he should not stop there. He should go further, ask questions with the management, collect additional evidence, corroborate it until he is either able to confirm that there is a fraud or a feeling that it is only a feeling and therefore it is fully dispelled. And so this would decide again on the sufficient appropriate evidence. Sufficiency and appropriateness we have mentioned. One is quantity, one is quality. What are the techniques that we use to collect evidence? These are all basics. Inspection, that is physical verification of cash or documents, all those things, inspection, title deeds, original title deeds, etc. Observation. Observation is when we coming to SA 501, you would know. When our assistants go for stock verification, or we only observe or oversee what is being done. It is not the auditor's job to carry the sacks on his back and then do it. Though some of us have done in our younger days. I remember going for a physical verification in a denim jeans and a black t-shirt because they were using carbon black there. So if you wear a light color shirt or a t-shirt for a physical verification, where the dress code is not very formal, then you would come back, discolored rather. So we would do that. But today it's very clear the audit has to be there and then observe that it's being done responsibly, properly, under supervision, and it's documented. Confirmation, whole lot of confirmations. Confirmation is not just balances. Confirmation of documents. Getting a letter from the banker saying that the original of title deed of the property belonging to this company, survey number, etc., is in our custody as security for a term loan taken by them. So confirmation of stock materials lying with them, job contract or consignee, sale or return, all of them. Recalculations like depreciation, deferred tax, all those things the management would have done. Very rarely that they do. We all agree that most of these work are done by ourselves. So, but then yes, we again double check if we are fortunate to have good corporate accountants on the other side of the table. Reperformance, inquiry, asking the relevant questions. Why? And I always ask the students that an answer for a query should lead to another intelligent query with a lot of examples from our practical experience. Now it is 28 years and we still are doing all those things. Analytical procedures. In an audit, you often forget after the vouch and tick, all those routines are done, the draft financial statements are done. The things which we round up and say that what is the GP? GP has gone down. Oh my God, what's the reason? GP has gone down. Current ratio, there's a major fluctuation. this industry has been doing well. So we have, that is where knowledge of business becomes very important. Need to make a cross-reference to SA 315, understanding the entity and its environment for a sensible risk assessment. Where we know the business, so entity-specific knowledge, MPV did mention about that, entity-specific knowledge, industry-specific knowledge, and also an awareness about the macroeconomic environment in which the entity is functioning. All that's very, very important. So analytical procedures, and it doesn't stop there. If there are adverse findings, if there are inconsistent trends, then they have to be further investigated into, say that, okay, this is what happened. In one of our odd cases where the GP had gone up in spite of the raw material prices, the raw material 75% is natural rubber. 75% of the, in terms of quantity, is natural rubber. Natural rubber price that year during the financial year was substantially ruling more than the previous year, but still the GP was on the higher side. Then we started digging up, there was some discomfort. Finally, it was found that manipulation of the Excel sheet in the closing stock working. The valuation of the closing stock working, there was manipulation in the Excel sheet. Simple example, you would have more intense and difficult examples from your experience. Of course, this is again talking about risk assessment procedures, also part of audit procedures to collect evidence. Audit risk briefly is the risk of expressing an inappropriate opinion. I repeat, the risk of expressing an inappropriate opinion is what is called as audit risk. It has many components. One is control risk. Control risks are the internal controls failing. The internal controls that the auditor placed the reliance on, and based on which he reduced the substantive procedures like vouching, verification. Internal controls are good. Internal audit is there. Internal control management meetings are there. MIS is good. Corporate practices are good. SOPs are there. Based on that, you reduced your extent of checking substantive procedures. And then finally, it happened that many of these controls actually was not there. Actually, they failed. When the 1992 the capital market scam broke out, Dr. Manmohan Singh famously said, it's a systems failure. That is Harshad Mehta, 92, if I remember correctly, yes. 2002 was Ketan Parekh, yeah. So other procedures, yes, I did mention. And detection risk, another type of risk is detection risk. Detection risk is that our vouching, our verification, our analytical procedures fail to detect irregularities. So collective of this control risk and detection risk is what we call it as audit risk. And substantive procedures and compliance procedures or test of controls. This is what I was trying to explain. And sometimes we place reliance on the work done by external experts. Management experts are they called. Actuarial valuation. Valuation of a building, when land and building, for example, when land and building is acquired for a consolidated price, one would like to know what is the price attributable to land and how much for building, because land we do not depreciate, building we depreciate. So there the objectivity, the competence of the external expert has to be evaluated. A sheet of paper just like that is not enough. Who is doing it, and what are the premises on which he has done that. Even we have seen in gratuity calculations, I would say terminal benefits, employee benefits calculations, there have been mistakes because have been very casually approached. And therefore, that also has to be taken with a pinch of salt. I think this we can move on. Selecting items in audit evidence. When designing tests of controls and tests of details, that is compliance procedures and substantive procedures, the auditor shall determine the means of selecting for testing that are effective in meeting audit objectives. I did mention this, therefore I think we can move faster, where the means available on the 100% verification in smaller entities. That is where MBV said internal controls and closely done by management, like a husband and wife kind of a business, where we can do 100% verification and all that. Absence of very formal internal controls may not be there. Selecting specified items and audit standard. selecting specific items, yes, we are not going to do 100% verification. Therefore, naturally, we have to resort to audit sampling. Since we are not covering that standard on audit sampling, I would like to mention here that the standard requires, to the extent possible, the auditor to do statistical sampling than judgment sampling. The difference being that statistical methods are more defensible, like using random number tables and all that. But most of us, I do confess, I admit that we have not started using in our firm. We're still not using random number tables, but we have our own internal ways of ensuring randomness of selecting the sample. And whereas judgment sampling, it's like saying that, the boss saying, do the audit for 2 months. Then the student asks, which are those 2 months? This is typical. 2 months, sir. Then he asks, which are the months we did last year? We did July and November. Okay, this time you do August and December. This is judgment sampling, which is not defensible in the context of disciplinary proceeding and things like that. And here, at least we can have a 10 random pickup of 10 months by drawing a lot and things like that. Again, stratification and things like that. So selecting the audit sample for selecting audit evidence, sampling is involved, and that has to be done sensibly. That is the crux of the standard. And if there is inconsistency or doubts over the reliability of audit evidence, then it is for the auditor to do modifications and addition to procedures, some explanations given by the management. I had this experience very long back in Palakkad. I don't want to mention the company. I was in the second year of my articles. In a company in Palakkad, there was a very senior finance manager who was quite respected and all that. And then into the 4th, 5th day of the audit, as a second year article clerk who was very curious, I did my articles with Varman Roma in Chennai. So that was in second year 89, part of 90 probably. Then this turned out to be completely covered up statements. He was a senior member of the profession itself. Then we had to start reading the whole thing. I had a discussion with my partner, and he said that is quite disturbing, Jomon. Cannot stop there. We may need more time, go deep down into this. So doubts, inconsistency, reliability of explanations, papers given, something turns out to be fake. Documents given to you are fake. So how do you go about that? We cannot stop there. We have to go deeper and confirm that we are laying on what is actually reliable, genuine, and dependable. Specific documentation, SA 230 is on documentation. Here it talks about this inconsistency. If it is there, it becomes a discussion, and finally it is solved out. SA 701. SA 701, I think I should make a cross-reference to that. 701 is key audit matters, KAM. As of now, applicable only for listed companies, but there could be situations where a lot of discussions have happened. Like, for example, here we talk about a debate, reliability, and then finally it is that the management is supplementing you with information. I would like you to have a look at the annual report of Reliance Industries last year's 1920 annual report, where the KM runs into about 5-6 pages. The auditor said the KM is like there's a columnar form. On the one side, the left half, the auditor says, we had our apprehension, not in this language. We had a doubt as to the justification for capitalizing. In Reliance, it is not the 1,300 crores of the thing, etc., etc. Then on the other side, it says, what is the management explanation? And it feels that the auditor has raised this question and management has given an explanation, and there is no need for a qualification or EOM even, emphasis on matter paragraph. This has been agreed upon. So the readers, the users of financial statements know that as auditors, we had certain concerns, which has been explained as given below by the management. That is the point. So documentation here is very important. SA 230 calls for the specific one. Okay. As a logical extension of SA 500, we have 501. Look at the name of the standard, specific considerations for selected items. 500, according to me, is a self-contained standard on evidence, but subsequently, a few years later, they came out with SA 501. 3 specific three selected items, they say we should have specific considerations. What are the three items? Inventory, litigation and claims involving the entity, and thirdly, segment information. We are reminded of Accounting Standard 17, business segment reporting. So this deals with specific considerations by the auditor in obtaining appropriate evidence in accordance with SA 330, SA 500, and other relevant essays with respect to certain aspects of. SA 330 is auditor's response to assessed risks. It is an extension of SA 315, and 500 we have all seen is an extension of that. For these three items, the auditor should give specific thrust, or rather the specific considerations. Let's start with inventory first. Now let me ask you a question. Now, how many of us either physically attend, at least in larger organizations, where inventory verification at the year end or on a different date? How many of us really attend? Or if you're not able to attend, I have not gone for at least for the last 3 years. Before that, I used to go to manufacturing unit in Kalamassery, where as a part of us, just being part of the team, cheering up the students, being part of the team, all that used to personally attend. The idea is to say that when it comes to CARO 2020, there's a lot of thrust on banking frauds. What is being presented to the banks are completely hollow, non-existent. Today, the balance sheet, if you take the value of non-existent stock sitting in the balance sheets of Indian corporates, and then also compare with the bad loans which already have in the system, which is officially 14 lakh crores. And unofficially, it is almost double that. Further aggravated by the COVID pandemic, today there are a lot of bad loans. Surprised to know that banks like Federal Bank have been given awards and banks are declaring better results. When the loan provisions, moratoriums, bad loans emerging out of this ex gratia, new schemes coming out, relaxations for MSMEs and all that. How can such kind of results happen? Maybe out of transactions, but transaction business is also reducing in terms of volumes. One need to really understand, really suspectful, rather become doubtful about the results which are now published by banks, one after the other, nationalized as well as scheduled. So the point here is that inventory most of the time is one thing which is played around. One is that you may have quantity of inventory. It could be very highly non-moving. I was changed from an audit because I told the managing director told him that your stock has not been moving. A particular odd color sheets which are used in laboratory furniture. It's not been used for 3 years. 3 years. We waited. First year we raised that point. Second year, third year we said nothing doing. It cannot be valued at cost because there is no demand. And the product styling had completely changed. So this is dead stock. And he was paying dividend as a private company. I said, boss, you're paying dividend out of your capital because you're showing this much. That was about, in terms of value in those days, I think it's about 1 crore. I said, that will not fetch any value. Or try selling it in the market if you're not getting a contract. I'm so upset that on certain other reasons, that year the audit was changed. It was before 2013 came. Why I'm saying this? Because today the management cannot, I repeat, the management cannot change the auditor according to its whims and fancies before the expiry of the term. And you are appointed for a period of 5 years. So today in NBFCs and banks, RBI as a representation has been made by the institute. RBI is now wanting to reduce it for NBFCs and banks to 3 years. And then there's a cooling period in NBFCs, a cooling period of 6 years. Something which is outside the scope of this, so we'll come back to it. So the key point, the question which I asked you is, how many of us are really attending physical inventory or sending our assistants? I remember, Madras Varmandrama, sir would write a deputation letter, it is called. We are deputing or following assistants to oversee the physical verification of stock at your factory. JOMON K. George, Surendra Menon, V.K. Sri Kumar. Okay. Then please extend the required support for them to expedite the work. Okay. And we used to carry this letter as a passport to enter their premises. And then we would physically verify the stock. And invariably, as all of us have experienced, during physical verification, they offer you lunch and take you to a restaurant which is 10 kilometers from the factory and order something which would take at least 1 hour to be served, and therefore 1 hour in transit, 1 hour in dining. So 2.5 hours of prime time is lost. And that's how they try to manage. And therefore, very important that the auditor attends inventory. Litigation and claims, it can happen that many of them are not properly disclosed. Some of them would have become a liability, crystallized liability, which means it should come into the balance sheet. Otherwise, it should be disclosed as a contingent liability, or claims against the company not acknowledged as debts. Very important. Third one is segment information. Is AS17 complied with properly? Is the identification of segments proper? I'll go to the details of the slide one by one. When inventory is material to financial statement, we are not talking about a few lakhs of inventory. Maybe in a smaller firm that also requires attention. The auditor should obtain sufficient appropriate evidence regarding the existence, very important, existence and condition by attendance at the physical counting. By attendance at the physical inventory counting. This is to be overseen. And I'll share with you one example. I think, I don't know whether I've mentioned this in Palakkad recently or Trichur. A year back, after the COVID broke out, we got a call from a friend of mine in Rotary, a past president, and they asked us this question, JOMON, can you do physical verification of stock at our factory in Kalamassery? No, it's a paint company which is now listed. I said, sir, what happened to your auditors? No, our auditors, they're a big firm based in Pune, but they are not able to come down, travel. And so they have asked us to engage a firm to do the physical verification and give a report to them and also to the manager. Then we quoted certain fees, agreed, and we said that there's no credit. All those things, though he's a very good friend, very revered, respected person in the business circles of Cochin as well as in Rotary and all that. Then the process started. My partner, after getting the engagement letter proper, went and started, they were about to start the work. And 3 names, one partner, 2 audit managers' names of that firm, the multinational firm, I can say Batley Boy, was given. And the first thing they had to do, my partners had to do, was to go there. The team has to stand in front of the factory with some of the management members and take a photograph, selfie, groupie, and WhatsApp to them. Then the entire process of physical verification done by my partner and the team was live streamed to them, videographed and live streamed to them. Which is that video is part of their audit documentation. While there are lapses on the firms of or lapses on many of these larger firms, look at this process, how they've taken. And then a detailed report had to follow. Every page had to be very exhaustive. Knowing that it is a large firm or a big four, as we call it, so we got a very high fees. And naturally, being a friend, he asked for a small discount. We said yes, but that is fixed. And the very next day, after giving the very next day, I would say by return post, if I use that term, it is RTGS now. We have that term by return post, the payment came. It's very important because we are giving undue credit to it. And if you have collected receivables now, who's going to give? The business have gone down, nobody's going to come down. We should have collected when the going is good. We didn't do that. How can we ask them now? Irene is smiling. I'll come to Trichur as a collecting agent.
No, sir, not because of
that is a positive smile. And a positive is a term which we used to use very frequently, and now we are scared to use.
Yes.
I saw one T-shirt where it was written in 2019. They said avoid negative people. In 2020, they said avoid positive people. 2021, it is avoid people. So on the story goes. So collections have to be prompt, and ours, I reiterate what I always used to say to my younger colleagues here, to those who come back from abroad and those who come back from Middle East, tell me, you have no prohibition. Good firms, if you are audited, the auditor takes a 50% advance for audit fee. Only after that they start. Of course, there are bad credit practices in Middle East. We have an office there, so I know, I've felt that. So that's a point. And ours is the only industry which gives 12 months free credit. Who a strict auditor is? A strict auditor is one who doesn't start this year's audit before getting the last year's fees. Yeah, Vinod. Some of the cases, yes, I'm not taking it lightly. So the point here, as far as inventories are concerned, is that in interaction with the management, we have to fix the date, the time, different venues, depute people, and make sure that's happening. Today, technology has advanced. I have not seen, but they say that in open yards and all that, instead of going around, the drones would go, and then it is connected to a system which will have an event counter, and that kind of things are taken. We can use technology, event counters like that. Work in progress, there are a lot of concerns. So all those things, we have to be extremely, extremely careful. I will take a 30 seconds break now. I have an emergency call to a 30 seconds break. You all can probably stand up, take a deep breath, and sit down.
Okay, sir. Okay.
I'm back. I'm sorry for the interruption. Okay. So again, one more thing is that take, for example, March 2020. In some situations, we may not be able to do it on the closing date, but do it on a subsequent date or get the report, authenticated report of an earlier date and relate it to the year-end inventory. That's a key point. Specifics when it comes to evaluate the management's procedures for verification, check with them, observe the verification physically. That's what we do. That's what observation. Inspect the inventory, sometimes quality issues and things like that with your knowledge of the business, or your team would go and inspect the inventory. Test count, sometimes we can do. In fact, in the case where we were hired, they had asked us to do 10 items of finished goods and 10 items of raw materials. And towards the end, at 4 o'clock in the evening, they said, now we would require you to take 5 items random as your selection and then give a report on that as well. So that's a test count. Reconciliation and verification is not done on the closing date, working back or working forward. Get authenticated report. This is something which is very important. When you ask the management, you go for an audit, you ask the manager, do you do physical verification? Yes, sir, we do almost on a monthly basis. Every month, that's good. Do you have reports? No, we don't give reports. It's all internal. Then probably it is not being done or documentation is not proper. But in the year-end verification, the standard specifically says this is specific considerations for selected items. First item, inventory, get authenticated reports. Litigation and claims, again, it's a company. So it says that you should inquire with the management, communicate with the internal legal team, legal counsel, in-house legal counsel, review board minutes, correspondence with external legal counsel if need be, and review the legal expense accounts. They may say that there is no case, then legal, professional legal charges, you see legal and professional charges, fees paid to accountant running into lakhs of rupees. I mean, lawyer or advocate running into lakhs of rupees. That cannot happen. So yes, these are the ways of making sure that all the litigations and claims against the company are getting reflected, disclosed in the right fashion. If it is crystallized as a definite liability in the balance sheet as a provision, or then otherwise as a contingency. The third one is, as I mentioned, segment reporting, which is the financial reporting framework requires segment reporting for non-SMCs and level 2 enterprises. That is companies, large companies. And the audit procedures should cover understanding of the methods used. How are they determined? How they have identified business segments, geographical segments, the primary reporting segment, the secondary reporting segments. Overall, we know the 10% criteria, 10% assets, 10% turnover, 10% profit. So business segments. Geographies, if the risks associated with the markets are different, then yes, they have to be classified as separate geographical segments. And also an overall reconciliation. Those who are familiar with AS 17 compliance would definitely know. So at some point of time, somebody was saying that the institutes reporting, there should be a segment reporting, the segments being members and students. The students pay a large amount of fees, and every 6 months they pay the examination fees, November after May, May after November, and the members are benefiting out of that fees. And if you take that as, then the member segment probably would show a minus, and students would show a plus. Really, that needs to be done. So take, for example, CIAL, the Cochin International Airport, do the segment reporting. When you see that the airport operation is not really making huge profits. It is the commercials, including the duty-free shop being Kerala, which is making a huge surplus. So that kind of segment reporting makes sense. Here, in the case of, from the audit perspective, audit point of view standpoint, the auditor has to make sure that the identification of the segments are proper, the classification of items are proper, and the reconciliation is done properly, and there is total compliance with accounting standard 17. That is a key point. That brings us to the last but one standard, because as MPB overshot this time, I can say that now. I would probably need another 15 to 20
Yes,
minutes.
sir, you can, sir. Please.
Chairman Aryan, you can say that, but is it the case with the participants?
No, it's okay. Fine. Okay, sir. No, sure.
Yeah, it's just...
We have a good number of participants. They are happy to hear from you, sir. No doubt.
Thank you. 171 as of now. Yeah. Not many dropouts.
No.
As you say, they are not skulking classes. All of us have done that in college.
This is really required for everybody, sir.
Yeah, these are all very, very relevant topics, but then so many standards together, maybe a little bit of monotony, but then let us again apply the work does. Now 50500B said the audit evidence, action points we did not say. The basic point is to say that I will collect sufficient appropriate evidence, inconsistencies would be resolved, and that would be documented. SF 501, yes, physical verification. Stock cannot be just accepted on a sheet of paper. Sir, this is our closing stock, signed by the finance manager. Even if he's a qualified person or reliable person, the Kingston Cotton Mills case again said, the auditor is justified in relying on the trusted servants of the company, trusted and tried servants of the company. But today is not the case always. Vishwasam adalla ella. Trichur people would understand that better. Trichur Malabar, which is that Vishwas Kalyan, no?
Yes, sir.
It is Kalyan Jewelers baseline. Vishwasam. But now the new the thing is Vishwasam adalla ella. And then so therefore Kalyan has gone public, and should got into the capital market. The courts are there. We are seeing it every day under the Kerala based list. 570 going concern is a big concern. Today. All of us agree. Today, many of our clients are finding it difficult to pull on. Somebody light away and taking classes, they said, sir, it's an old joke in Chennai during our classes in Chennai. Somebody raised some money in 1 or 2 days, and he escaped, he went away. And then he was asked, why did you do that? Then he said, my auditor advised to follow going concern basis. So this is fly by night, not going concern. So this is student time Kadi joke from Chennai. So going concern is today in the wake of this pandemic, particularly second wave hitting towards the year end last year. It was very bad, and finalizing 2020. At this point of time, I should also tell you that the institute came out with 6 COVID specific pronouncements, about which we'll discuss towards the end of this. And in that, one of the major things is going concern. Let us discuss this to see the specifics now. General purpose financial statements are based on going concern assumption. It's an assumption. Consistency, accrual, going concern. Consistency, accrual, and going concern are accounting assumptions. They're not accounting policies. They are assumed to be in place. Accounting standard 1 says that a mention is required only if that is not in place. Going concern basis is not in place. And today what the auditor's challenge is that even when going concern is at stake, putting all the tests of going concern into that, getting negative answers, the management would say that we are still a going concern. That is the concern. That's the point which needs to be addressed. The auditor should obtain sufficient appropriate evidence regarding the appropriateness of going concern assumption. in accounting. Businesses have substantially come down. Take, for example, many of the restaurants, many of the small resorts where the businesses can give large number of instances. Travel agencies. Today, they were having a lot of difficulty because it's all on technology. You don't go to a travel agent now. You go to Make My Trip, you go to bookingmy.com, and so many of them, Trivago, whatever, they go to them, and online you get everything at much better rates. So the industry was going down. Some events were there. I know. I would also like to say those who attended the SIRC conference 1920 here in the Lulu International Convention Center in Bolgati. We had 2,600 participants. Those who have seen the facility, it is really, really good facility. And today, nobody goes there. You see only crows flying around because no events, nothing. The kind of investment which has gone there. As the assets been impaired. Of course, post-COVID, they may come back. In between period also, they were organizing small events, 300 people, 500 people. But it is not made for that. They made for events for 3,000 people, 3,500 people, all those things. So many of the businesses have really gone out. So even with that, the management would always say, we are still a going concern. And that has to be really substantiated. The onus is on them. Because if going concern is at stake, if the management says that, sir, I don't think we will be able to pull on. We will have to sell off lock, stock and barrel. Then what happens is, your fixed assets, which are stated at cost, will have to be written down. Discontinuing operations, AS 24 considerations will come. Your liabilities may go for a one-time settlement. That may have to be written down. It's a huge exercise, therefore. And then the message goes to the outside world that, okay, this is going down. So debtors will not pay. Customers will move off. Employees' settlements demands would come. Unions will become more aggressive, and all those things can happen. Therefore, very, very touchy issue. Conclude and report based on the audit evidence obtained whether a material uncertainty exists. Now, there are certain resorts, for example, where this is a lack of business. After this, bookings have restarted, and we are seeing that UK, Spain, the whole of Europe is today now getting ready to welcome tourists back. No masks, the beaches are full, no masks nowhere, and therefore that kind of situations are there. So hopefully that'll happen. If it's a short-term transitional issue, yes. So we have to see, like a doctor. MBA did compare that our profession to that of a doctor. And there we're talking about like a patient is really terminally ill, or this can really be treated. Short-term treatment, little bit of long-term treatment, reduced exercise, reduced work, a diet change with that can be brought back to track. If not in the full capacity that or full strength and agility that he or she had, with at least 60-70% possibility of good health. If that is the case, then going concern is not fully at stake. So that is where we take a very, very studied thing. So the indicators are today, when we look at it, there are 3 different types of indicators which I mentioned in here. Financial indicators, naturally yes. Operating indicators, and residuary, they have put other indicators. Now, financial indicators, SF 570 says, net liability or net current liability position, which means that long-term assets, long-term liabilities are heavily in excess of this. We have seen many balance sheets with the vertical form, capital a very small amount, borrow, then reserves and surplus, a huge bracket, that's accumulated loss, 20 crores, borrowings, 22 crores, capital is only 2 crores, borrowings, 22 crores from banks, financial institutions, private agencies, violation of acceptance of deposits, chapter 5, all those things are there. So that's a very bad situation. Borrowing from, according to me, borrowing for more than 15% from NBFCs. If it is going healthy, if you have a good relationship with the banker, the financial management principles in long-term funding, capital structuring, as well as in working capital management are of CMA form and things like that. That is a bad trend. But maybe for short-time tiding or short-time crisis, it is possible. Maybe some of your debtors have gone really bad. And net current liability position also, that the company or entity has become illiquid, insolvent. Withdrawal of financial support by creditors, warning letters, signals, red letter notes from bankers and so on. Negative operating cash flows. Here is something which one has to be careful. we were finalizing an audit last year. We had a discussion with the partner. Finally said that, okay, company is having a very minimum profits, but it comes to actual operating profit, that is cash flows. Cash flows from operating this thing is quite on the minus. So we have in the cash flow sensibly that is prepared in accordance with accounting standard 3, even for small companies today, and not small companies, all companies except small, dormant and OPCs are required to prepare cash flow statements. It is by virtue of the new definition under 2 subsection 40 of the Companies Act, where they have to prepare cash flow statements. If it is sensibly prepared and analyzed, it gives indication about management, how well they are doing. Operating activities, investing activities, and financing activities. Your acquisition of fund, your acquisition of fixed assets is the investing activity. For example, okay. Now, operating activities is your net profit adjusted for working capital changes, add back of depreciation, etc. You know that indirect method of cash flow. Adverse key financial ratios. All ratios have gone berserk, and therefore these are the financial indicators which would give which even if the management tries to hide, the auditor should bring up all these indicators and say that these are all, we are smelling something doubtful. This casts a real shadow on your capability to pull on into the future, in the foreseeable future. We are not predicting into the what cannot be seen in the near. We talk about the foreseeable future only. What cannot be foreseen is not the concern of the auditor. And let me remind you that those who started looking at CARO 2020, the auditor is required to have foresight. So far, the auditor was required to report only about the past, current, now today, about foresight also. This is a concern. Is going concern at stake? Will the entity be able to pull on? Like little bit of Jyotisham will be required. The auditor should learn Jyotisham and say that, okay, this, that we have to do. Financial indicators continued, inability to pay creditors, inability to comply with terms of loans, major defaults, NPA classification, and giving customers material discounts, substantial discounts for cash payments. Credit to the vendor, please give us some money, we will settle for 80%, 70% like that. That brings us to operating indicators, which would again cast a doubt on the entity's ability to carry on as a going concern. Management's intention to liquidate the entity and cease operations. When you go through the minutes book of the board, you see that there's a decision of the board. We cannot run the business like this. Therefore, in 3 months from now, we look at the options of winding up the business or selling whatever is available and then getting the assets liquidated and paying off liabilities and so on. Loss of key management without replacement. The no replacement, key management people are leaving, but no replacement, which means that the company is becoming a situation that can happen. Therefore, this thing. Today, whether we have seen the Infosys CEO's last year remuneration, 2021 remuneration was 49.83 crores, as against 34.27 crores in the previous year. It's quite striking. Shortages of important supplies. Stock on when you get into walk into a shop, you would know that, oh my God, what's it? There is a negative vibe. Shelves are all kali, there's nothing in there. So important supplies are not there. Key materials, go to, for example, go to a provision store, you ask for, is there rice? No rice. Oil? No. Parip? No. Sugar? No. So which means that, he's not replenishing the stock and kind of pulling down the shutters. The emergence of a highly successful competitor. This has happened in many industries. Many industries have died out. We know that many very, very competitive, resourceful competitor. I'll give you an example of probably an example which is kitchen treasures, curry masala powders, which is the money power of Synthite, and therefore they are coming into the market, bringing Manju Warrior as a model and doing aggressive marketing, and that has really reduced the market share of many of the competitors. And some of them, like if I remember, Melam and all that have gone out of the market. They're not there now. So the competition are finding it difficult. It is stiff. And with that money power, they can really afford. So that can also cast difficulty on going concern. If it is huge reduction, and sometimes they come with annihilative, eliminative practices, the unfair competition would come in. So that also could be an indicator. Major market key customer loss, franchisees moving off, licensees, principal suppliers signing off. They're all operating indicators which would say that, hey, be careful, auditor, keep your eyes open. Going concern may be at stake. Non-compliance with the statutory and regulatory requirements. Recently, a small company, not very small, and they are into gardens, which is very interesting. And they have a particular breed of plants. They have the biggest collection in South India. So they came to me for restructuring, and the first thing he said was, sir, GST license got cancelled because we have not been filing returns and paying dues. All of us are getting calls every month, isn't it? From GST department. Return is not fair. Remind us. The system is taking care of that. So here, regulatory, that is only temporary because he is getting funding from a private equity, which is partly owned by a relative. So he was trying to streamline everything and saying that everything is clean before the private equity comes in, something like a cleansing of the systems, processes, people, all those things he wanted to do. I said, your accountant needs to be replaced. Unfortunate to say, he cannot cope up with what you're dealing with, and he's just doing the data entry. That's not enough. And therefore, that happened. And also such an internal audit and things like that. Pending legal regulatory proceedings, huge amounts of penalties, likely to happen, which could be a contingent liability. But looking at the facts of the case, you are convinced that chances of winning are very few, therefore very, very bleak, and therefore, yes, adverse changes in law, regulation, policies. We remember the crisis that came in Kerala when the liquor ban came. Huge investments, 3-star hotels, how many, 534 or 450 bars in Kerala were closed indefinitely. Many of them found it very difficult. They were all on borrowed funds. And that time classification of 3-star was mandatory to get a bar license. And many of them had reached that, business was going good, but then they don't keep reserves. And finally, that had this thing. Or take, for example, Cuba prohibited smoking. Even when Fidel Castro was there, he was a heavy smoker. And he stopped smoking, and in the country, it was banned. Smoking was banned. Suddenly, if you are a tobacco product manufacturer or cigarette manufacturer, naturally, yes, these reversible policies can bring the business to a grinding halt, which can happen. Therefore, those are other indicators. The auditor shall consider whether the management's assessment includes all relevant information of which the auditor is aware of. Management half-baked, are they acting on half-baked information? If yes, the auditor should inform them, hey boss, look here, there are certain issues which you have not got sight of. This is what is happening. This is what's happening. Even with the financials, sometimes they may not be having the real picture. Most of the time when you go for internal restructuring, many of the information you give them comes as a surprise to the top management. It was like this, I never knew. How long is it like this? It has been there for quite long. It is cancerous from an organization's growth perspective, continuing sustainability perspective, and so on. And then the auditor shall inquire of the management about the knowledge of events which he should really alert them, and that would give rise to substantial amount of significant doubt. This I think we can skip. And yes, request management make us say yes, it's fine. The auditor shall analyze the cash flow forecast prepared, if any, the data used, the assumptions made, etc. The auditor should use that. Determine whether there is adequate support for the assumptions and forecasts. So when you say that this is what you're going to do, how does your future look like? He would say probably give a business plan. Most of the time it will be make-believe. A friend of mine who I did a project report for him a few years back for a food processing, a higher-end food processing unit. He was from Austria. Christoph was his name, and he looked at the report and said, JOMON, thick enough to serve the purpose, contains a lot of irrelevant information. And about financials, any project report that matter is largely make-believe. That's what he said. So the assumptions which were used were based on the business plan given by the management, be prepared. And therefore, when it comes to assessment of going concern, yes, one has to be clear on the management assumptions, and the assumptions are, with adequate support, and the forecasts are reasonable and maintainable. Very importantly here, That is our next standard and the last standard, that the management should request for written representation. The auditor should request for written representation from the management. All these explanations should be got in writing. So that is about the written representations as far as SA 570 is concerned. I will conclude in next 5 minutes running through the next stand. 570 going concern. This I picked up from the Institute's publication, COVID-related publication on a pronouncement on COVID. Look at the second paragraph. In completing work related to going concern, professional skepticism should be amplified. The auditor should ask why. Why, and he should not take explanations for granted, people for granted, documents for granted. Always take these things in the wake of COVID, the going concern aspect with a pinch of salt, and if need be, a pinch of pepper as well. That is a point which is the crux of this particular slide. Another 5 minutes to complete SA 580. Written representations is, I would briefly say, during the course of the audit, a lot of discussion with the management. You ask questions, they explain, the inquiry and confirmation. It's called inquiry and confirmation. You ask a question, management gives something. Is it that further inquiry, confirmation, all those things. The key point SA 580 says is that this cannot be oral. What is orally said is can be volatile, they can disown. So let there be a written representation, a detailed letter of representation or management representation letter from the management in respect of every audit that we do. This is the spirit of it. As an appendix to the standard, they have given a format of the letter of representation or management representation letter, which has to be obtained. And if you have any problem, again, mail me. I'll share we don't have to reinvent the wheel, probably share that with you. The format of the letter of representation on so many things, the management acknowledging its responsibility for preparation and financial statements, having good internal control systems, completeness of information, saying that we have made all the provisions. These are the bank accounts. We do not have any other bank account. The cash balance on 31st March was physically verified and it was so much. The physical inventory is so much, that the inventory value is so much, that is physically verified. Physical verification report is attached. There are no unprovided or undisclosed liabilities, so on the story goes. Profit, general points. Objectively evaluate the reliability of written representation. So people tend to ask, is it okay you get a written representation and do away with most of the substantive procedures? Management management has done everything, so should be again. This is only additional comfort. This doesn't relieve the auditor or reduce his responsibility in doing substantive procedures and getting the required evidence. As an additional comfort, as an additional assertion from the top management, we are getting letter of representations. Should be signed by members of the management who have primary responsibility. We normally insist on that getting signed by one of the board members. For the general manager finance at that level, sometimes yes, but otherwise mostly it is the board members. And the audit, look at that, the audit should disclaim an opinion on financial statements. Disclaimer of when the requested general written representations are not provided. If they refuse to give written representations, then how can we say the first line in the auditor's report? We have obtained all the information and explanations which are considered necessary for the purpose of our audit. If this is refused, and if it's unreliable and the auditor is unable to obtain sufficient appropriate evidence. So non-furnishing or not providing the letter of representation would tantamount to a limitation on the scope of the work in getting appropriate evidence, and therefore that would result in a disclaimer. So these are the points which I thought are relevant for these 5 standards which we discussed today. We had to rush a little bit, but I hope it was fairly at a pace where you could understand the spirit of those standards. And what is most important before I conclude is the learnings are fine, but application is more important. So let's make a fresh resolve. The action points which we mentioned, it's not because JOMON is asking us to do this. JOMON is not relevant here. It is because the Companies Act is asking you to do that. The Institute is asking you to do that. The NFRA might ask you, how have you done the audit? What is your level of compliance with standards in auditing? And tomorrow, I would like every one of us, all the 205 attended here, to be capable, to be resourceful, to be compliant enough to pass a peer review and get that certificate with a hallmark of excellence. Thank you very much for the opportunity. If there are a few questions I can take, I quickly run through the questions as well.
Yes, sir.
In
There
today's
are few
electronic,
questions. Yes.
yeah. Sundarayan sir is hunting me down with questions. Okay. In today's electronic virtual audit, what additional care should be considered while relying on the soft copy of invoice, purchase orders to ensure that source documents are not tampered, changed? Also, mail confirmations on mail evidences, how to test the authenticity of mail IDs and evidences. Yes, sir, there is a bit of a challenge. Methodologies are evolving, and the level of reliability which is on the documents without real physical touch feel, things are a little difficult. So new methodologies have to evolve. Where we do audits in virtual audit, even very I would say that interim audits and all that, we still try to make a physical visit to the extent possible. That is our experience. But going fully digital, it has got its own associated risks, which cannot be ruled out. I think which should be part of the audit report, where we say that this has been done in particular fashion, and that is the way the reports are done. Virtual audit, how do we carry out cutoff procedures in manufacturing entity for inward and outward if registers are also in physical verification of virtual audit should be assessed. Audit evidence should be obtained to mitigate the risk. Here again, there is a huge thrust on management representations, SA 580, not straying from the point of technology. But here, there again, yes, we have to get representations. The last document references, we used to call them, for cutoff procedures have to be obtained at the higher level of the management. If the management has a policy of cyclical count, how the attendance should be planned. Example, do all A and C category every time, maybe monthly or fortnightly in case how is to be planned. So I think the attention should be on high value items. We know about ABC analysis and all that, where cyclical periodically we can attend. And if there are reports, you do it once or twice a year. And if the processes are found to be okay, you can place some amount of reliance on the internal reports of the physical verifications, or as you said, cyclical counts that has been done during the year. Any specific representation to be received in virtual audit as evidence are reviewed? Yes, that has to be obtained physical thing, because the management has to clearly say that what has been provided virtually. So today data is flying around. Today the article student's laptop has the client tally data. So there is a huge concern on data integrity, data security. But here it has to say that the management has to say that what has been physically or rather scanned copies that have been provided are actually in possession and that they have not been tampered with. That kind of additional written representations do not confine them. To take a short deviation, SA 550, related party transactions, AS 18 complaints, 188 of the Companies Act, related party transactions, all that we have to get. In fact, SA 550 related parties, that's a separate representation letter on the related party transactions. That's complete disclosure, and the 189 register abstracts have to be obtained, all those things. So on the technology front, I'm really not an expert, but the whole point here is to say that the objectives remain the same, methodology is same, your concern is not fully addressed, and at this point of time, it is evolving. So we have to have new methodologies whereby the virtual data provided should be the real underlying data. I hope I have answered all the questions. It's back to you, Aryan. Thank you very much for the opportunity. And I would like to profoundly thank all the participants, 200 of them. Even now we have about 150 of them online. Before I conclude, one thing which is general, I would like to share. I'll take only 1 minute since the 3 branches members are here. Yesterday we signed an MOU, Ernakulam branch. When I say we, here as a member of the Ernakulam branch, we had an interaction for some time with the Apollo Atlex Hospital, which is in Angamali on the highway at Karaguti. And we have been able to sign an MOU for 600 doses, 300 Covishield, and there's some background disturbance. Can you unmute others? Okay, 600 doses of vaccine, 300 Covishield and 300 Covaxin. By this time, all the 300 got booked, Covishield. Covaxin, I think there is some kind of an inhibition that if you're going outside India, I think Covaxin, I think there's some kind of lack of clarity on that. So this is going to work out on Saturday, hopefully a Saturday, Sunday. We will just have a look at how it's going to work out. And if possible, if interested, nearby branches. And it's not, when it comes to vaccination, many of our members, family members are not able to reach out to get vaccination. Trichur particularly to come to Angamali is not very difficult. So if that's working out, I would,
Yes. We are in the
request
planning.
you to consider. We can probably have a tie-up. We have a chartered accountant there who is very, very dynamic and positive on tying up with this. And we are the first one to have an MOU with the Apollo Hospital because a huge facility. What they're doing is the entire Atlex Convention Center, if you have been there, which is slightly away from the hospital in a very hygienic environment. They're doing the proper distancing. Hygiene is good. There's a team. We personally visited. I was there almost a full day yesterday. So just think about this possibility. Let us take it forward. So do stay safe and let us all be hopeful that this too shall pass while being careful about ourselves, about our family members. Stay blessed. God bless every one of you. Thank you so much.
Thank you, sir. I think you have covered all the questions, and then there is no other questions and left out now. So regarding that, what, sir, that we are also planning to do that vaccination, that we are collecting the response from the members. So we have prepared the Google form. So we will be sending it soon with the information. So based upon,
You're tying up with any hospital in Trichur, or is it possible? Or?
We had a tie-up at Trichur here, but they don't have any vaccine now. So we have to have tie-up with Apollo only. For
Apollo,
that,
they have a regular sourcing. I think they are taking bulk quantity for all their hospitals across the country.
Yes.
So let's see how this works out. I'm just giving a suggestion.
Yes, sir. We are taking the demand from the members. We are going to send that today itself, the Google form for getting the response. Based upon that, we will be approaching you and the Ernakulam branch, sir. Very sure.
Very good. Very good.
Just your support on that one.
We will surely support.
Yeah.
Just an addition on to that, sir, from Kozhikode branch.
Yes.
Sir, from the SIRC level, can something be taken up as a South India pan basis? Something can be taken up, because I think the mass vaccination has happened at the SIRC level also. So majority of the members have not, from 18 to 44, are facing the difficulty for getting the appointment itself. So something can be taken up.
There are two ways of looking at it. SIRC, the what you talk about the mega vaccination, I don't think it has been huge in numbers. I do not have the exact figure, so I may be excused for that. It was done at Chennai, but SIRC level, I don't think it's going to work out. I think there's a specific one-to-one contact required for the health facility.
Okay.
We are prohibited, insured central office is prohibited branches from having vaccination centers other than in hospitals and healthy and hygienic environment. So that is a point. So Calicut, we can should really look at MIMS or all those hospitals where we can really work out. And it is business. End of the day, it's business. It is 1,250. When me and my wife took, it was 250 for Covishield, and today it is 1,250. So we saved 4,000 rupees. So some local tie-up we should try for. And that is a way to.
Only one hospital here is there. That too, slot is available only at particular time, and only 200 odd slots maximum.
That's what, because COVID once you register, that is being done. But now that slot is, you have an option to select. And here what we are doing is that Google form we are giving to the hospital, and based on that they'll give us the time slots. So there is no queue, there is no rush. So if something can be worked out, list out some of the hospitals and give them the commercial side of it, they would be attracted. And if not, if this is working out, I'm not saying specifically about Trichur, said Trichur only because it's nearby.
Yeah.
So if that kind of thinking is possible, Apollo seems to be very positive on this, not just a business perspective, and also enabling this. One of their floors in the hospital, complete floor is earmarked for COVID patients with oxygen beds and ventilator, ICU, everything. And it's a wonderful facility. The old Premier Cables compound, if some of you would remember, and now that's really good. So here it may be possible, but I don't want to take a chance. Friday, Saturday, Sunday, what happens to I'm going to be there full time on Saturday and Sunday during the vaccination time of the 600 members. And I would be there. There will be some student volunteers also. And with the team, we'll work. And if that works out, yes, then for Calicut also, why not? Yeah, please, no problem. You're welcome. But I'll confirm only after Saturday, because there again, now after we send this indication now, I was told that KPMG is approaching them, Eastern Group is approaching them, BPCL, a lot of people are approaching them.
Okay.
So we cannot have a crowd, unmanageable crowd, and do this. So we said we need exclusive earmarked space, and we'll be there to oversee the entire thing, like inventory verification overseeing. SF 501, we are going to be there. So let's see how it works out. And Palkad also, so Vinod is not very far away.
Yeah.
Yes, sir.
Early morning
We'll
when I
check
come
out.
to Palkad, it's just 2-hour drive. And now the traffic is not the biggest advantage is there's not much of traffic.
There's no match.
Yeah.
Here also we approach couple of the hospitals. They are not having VATs in stock with them. That's the main issue in Palakkad.
Yeah. That's not because they will not be very proactive from a business point of view. Now, Apollo is again not to find fault. Apollo is also charging a 150 for hospital and service charges, which is for so 1,500 for Covaxin and 1,000 for Covishield. Or it's the other way around.
Yes.
So either way, yeah, so that's business in it. Depends on how we present and but then I don't think there's a huge shortage. In a week's time, all of them can get supplies. Let's
Yes.
push it a little more, Vinod in Palkad.
Yeah,
Sir,
sure.
they-
Sir.
But if it's not there, for Saturday, I'll be able to tell you. Apollo, we can probably type. I told the Deepak Savior is a chartered accountant, young guy, but very dynamic guy. So he's very clear on, sir, if it's workable, then we will see. But let's experiment this first.
Okay, sir.
Thank you, sir. Thank you.
Okay, sir. Sir, one more question has come. Is there any audit tool or software to check the compliance? One question in chat box one has come. So,
Any specific, what's the question? Is on top.
is there any audit tool or software to check the compliance of standards or audit?
Not really. Audit compliance checklist has to be in-house. To my knowledge, no. Because the requirements of collecting evidence, that is where the profession, there are a lot of things which involves professional judgment. When we talk about this artificial intelligence, two things which are very, very important. One is AI will not use judgment. And AI cannot use professional skepticism. This is an old school of thought. But then actually, factually it is so. But then when it comes to compliance checklist, yes, I don't know which member has raised. Let us make a checklist together for use and then share with all the participants. Who is the querist? Aryan, Sundarayan sir only or somebody else?
No, it is CS Sony.
Oh, Sony. Okay. Sony, you can start working on it yourself. And then we'll develop on that. There are only of the 45 standards, general applicability, there may be only 15, 16 standards.
Okay.
So we will develop on that, that we can do it together. Absolutely no problem.
Okay. Thank you, sir. Thanks for that one. CA JOMON K. George has made a wonderful speech on the standards on auditing, 2020, 500, 501, 570, and 580 with the available time. Thank you, sir. We have to take care while conducting the audit with respect to the standards on auditing. He has live examples of audit works done during his articleship and practice. How to handle the auditing, developing stronger team for safe and secure audit completion. Need of doing the peer review, audit procedures, collecting evidence, internal controls, test checking of samples, going concern, a real concern of us and the client. One thing is sure that without standards on auditing, no going concern to the audit. Finally, the importance of written representation for the areas required to be collected. He has clarified all the doubts of the members. Thank you, sir. On behalf of Thrissur branch, Kozhikode branch, Palakkad committee members, and all members attending, we are thankful to you, sir.
Thank you so much.
Now, I am calling CA Vinod Menon B, Chairman Palakkad, for proposing vote of thanks. Over to you, Vinod, sir.
Before Vinod, you take over, the point which Aaron wanted to drive home, that there is no going concern for audit without standards on auditing.
Yes, sir.
I
cannot tell, sir.
Thank you, Aaron, for raising that very valid point, very rhymingly.
Thank you, sir. Thank you.
Vinod, please.
Thank you, Aryan sir. Thank you.
Yeah.
Respected Chief Guest of the day, CA MP Vijay Kumar sir, our beloved CA JOMON sir, a past SIRC chairman, and chairman of Thrissur and Kozhikode branches, Aryan sir and Arun sir, managing committee members of all the three branches, senior members in profession, peers and friends. Good evening, all. In the interest of time, we know that it's already past 6 o'clock. So, in the interest of time, I will be quickly finishing my duty vote of thanks. It's in within 120 seconds. Standards on auditing today's session is an eye opener for all of us, and I am sure that everyone will agree that speaker made us know the importance of subject in our day-to-day profession. There is no exemption for a practicing chartered accountant who is doing 500 crore turnover company or 50 crore turnover, 5 crore turnover company. So let us learn from what we have and let us try to implement it in our profession. Being the first day of joint seminar, we had an excellent learning experience. Thank you, sir. Let me move towards my task of vote of thanks. First, I express my sincere gratitude to the chief guest of the day, MP Vijaykumar sir, for spending time with us and updating us with more importance of standards on auditing and inaugurating the 3 days joint seminar with Thrissur, Palakkad and Kozhikode branch. Next, I would like to take the opportunity to thank our Pearl of Kerala, our own CA today's speaker, CA JOMON sir. He is always with us, always on call, and with all the support he is providing us now and before and even afterwards, it will be sure that for giving us an excellent learning platform on standards of auditing and how to install or implement that in our day-to-day activities. Thank you, sir, for giving us an excellent presentation.
Thank you, all the three chairmen, for the wonderful opportunity. Really enjoyed my time online with
Thank you, sir. That's my fellow counterparts, Aryan sir and Arun sir, who have been continuously monitoring and taking efforts in making this joint seminar a grand success. There have been a small group has been formed, and I think more than a seminar, a lot of discussions happened, calls and everything. Thank you very much, both the chairman, Thrissur and the Thrissur branch and Kozhikode branch. Thank you. With such an overwhelming participation, that is in a huge crowd, like we can say that more than 200 members participated in our seminar, today's seminar. It's itself a grand success. I thank all the members who participated in this seminar, and let us continue this for next 2 days as well. Thank you. Thanks all the members who participated. Also thank the managing committee of all the 3 branches to make this seminar activated or implemented. A special mention to the staffs of Thrissur branch for providing us a wonderful platform to interact with. Thank you all. Thank you very much for giving us this opportunity. All the members, please note, tomorrow we will have the day 2 of the seminar, starting from again 3 p.m. to 6 p.m. Please participate and make it another success. So before concluding, request all the members to please stay safe and stay healthy. Thank you. Good evening.
Bye, everyone. Bye. Arun,
Sir,
Arun, all of you.
Thank you, sir. We have one more. This one, I request all the members to stand up for the national anthem. One more.
Sure.
अधिनायक जय हे भारत भाग्य विधाता
पंजाब सिंध गुजरात मराठा गंगा विंध्य हिमाचल यमुना गलति करंगा
तव शुभ नामे जाते तव शुभ आशीष पाने गाहे तव जय गाथा जन गण मंगल जय हे भारत भाग्य विधाता जय हे जय हे जय हे जय 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 हे।
Sir, thank you. Thanks to all.
Thank you all.
Bye-bye.
Meeting adjourned.
Bye.